anything to talk about, and I finally see that you want to talk about banks and stuff like that. But can we just start with
Talk macro.
Atlanta Fed? I mean, why would we cut rates if GDP is running?
I don't know. We got to be careful about the Atlanta Fed tracker.
I know.
It's more directional than anything.
But you would say consumers are in pretty good shape.
I think they are. I do. I mean, I know we get a big jobs report this Friday, but weekly jobless claims are still very under control, under 230,000. That's the leading indicator. The number on Friday is a backward-looking number, so we'll watch the numbers, but they're spending. Spending was up 0.5% month over month. Income was up 0.4% month over month. These are the numbers we got last week. And oh, by the way, wages are running at 5% growth annualized. So that's good. And card spending, Chase card spending actually showed an acceleration in August versus July. So consumers doing their job, they're spending, that's great. But we also have business investment. Durable goods, ex transportation, rose 1.1% last month. So you're seeing not only AI, data center, all that, but you're seeing real demand and a CapEx cycle.
Are we going to hear the numbers aren't trustable, Sorkin?
From who?
From
which
DLS?
Side, which side of the...
That's what I'm saying. What if it's really a good number? Then what do they say?
I shouldn't say which side of the aisle. There's only one side of the aisle.
She said it's going to be a big number. I think you meant it important.
Good news is good news no matter what, Joe.
Right, but is it immediately going to be undercut in terms of we can't believe the numbers? That's what I'm saying.
Not yet.
Okay.
Too early.
You sure?
Yes.
All right, I'm going to hold you to. Oh, actually, I don't think you're fine. It's a bad day to be off, but.
Sorry.
Yeah.
Isn't it jobs report?
I can't. I got things. I got places to go. People to. We all have lives. I mean, you've been. The summer's over.
Summer's over.
Summer's over.
Yeah.
But it's not over. It's still like sort of summer. That's the other thing.
But look, at the end of the day, we care about earnings because stocks follow profits on the way up and on the way down, and earnings came in at 11%. Everyone thought it was going to be 5%.
Yeah.
Revenues came in at 6%. Everyone thought it was going to be low single digits. So we care about the economy because it filters into earnings, and earnings have been pretty good.
Other than, so you mentioned the banks. You like the banks?
I like the banks.
You do? You've been owning Freeport for a long time, too.
I have. Well, look, if you believe in AI and you believe in data center, you need grid. If you believe in EVs, you need the grid. You need copper. If you believe in housing, I'm a big housing bull. I think that we're just starting to see a recovery in housing, and these stocks have actually done really well in the face of not great earnings. But you need copper for all of that. And the company actually raised guidance for copper the second half of this year, and no one paid attention to it. So numbers are going higher. They're doing a really good job in terms of costs. So stock's pretty cheap at 7 times EBITDA.
It's September now. I know that's that's not news to anyone, but that means October's next. Is this going to be different, or are we going to? I mean, we're down first day, knee-jerk reaction. You don't look overall at October being a time when the stock market makes lows.
September is worse than October.
Yeah, because we make lows in October.
That's right. So we have maybe a rocky 6 weeks. So I think you take advantage of that because of what I just said, because earnings are actually better than expected. And oh, by the way, we're up 30% from April. So it would be fine to have a 3-5% pullback or any kind of a pullback. I think you buy it. I think the fourth quarter is going to be very strong. And so I think you want to be buying some of the volatility.
Journals help me. Stocks in the U.S. stand at their priciest level ever. The S&P 500 has never been this expensive, nor more centered on fewer companies.
Okay, that's
true. So who decides? Does an editor decide? How does that work?
That's true that the overall market is expensive, but that's why I like the banks, because they're not expensive. That's why I like the Freeport. That's why I like housing. I like discretionary too. Back to school was really pretty good, especially if you have the right stuff.
How do you feel about the consumer? Only because we've got the McDonald's CEO who's going to be joining us later. They have talked about how they've seen consumers, particularly at the lower end, who definitely seem a little cash strapped, who are looking for bargains, who are looking for value.
I kind of think that's always the case, that the lower end is always kind of struggling a bit, right? So, but I would say that inflation has come down, gasoline prices are down double digits, you have jobs, so it's the labor market that really matters, and as long as people have jobs, they spend. We're a nation of spenders, whether we have the money or not. I mean, it's just the facts.
You don't delve into the political side of things ever, but how can we be at all-time highs and the most expensive time ever for stocks with all this chaos and all the you know, the angst and the hand-wringing and the end of democracy, and you just ignore all that noise? People think that the president's dead, there's an imposter. I mean, why are we, do you just ignore it completely?
I kind of think you do have to ignore a lot of it. A lot of it is noise. We were worried about tariffs. We're starting to get to the
Tariffs,
end. We're getting to the end of that. We're going to focus on
Yeah,
deregulation.
the courts are putting an end to that.
Okay, I don't know. But my point being is, like, I think we're like in the 7th or 8th inning in terms of the tariff talk, right? And companies are dealing with it. So now we're going to then focus on the growth part of the administration and the deregulation and low taxes and stimulus, fiscal stimulus next year for the consumer. So I kind of think that the markets should be where they are, but I think that the broadening out is much healthier, and I'm glad to see it. But that's where I think the opportunities are. I'd still like tech, but I like so many other sectors and so many other stocks at this point that are cheaper.
You
than
still read the
22 times.
newspaper? You watch the news?
I do like
You do?
paper.
You read the
paper
newspaper?
better than the computer.
But you're still long. It's amazing. Okay. All right, Stephanie.
Good to see you.
Good to see you. Thanks.
Okay, coming up on Squawk Box, a group of former CDC directors now say Health and Human Services Secretary Robert F. Kennedy Jr. is endangering Americans' health with his vast set of changes to the government's health bureaucracy. We've got details on that story right after the break. Don't go anywhere. Squawk Box rolls on this Tuesday morning, post-Labor Day. The sprint of the year begins now.
C.
Welcome back to Squawk Box. A group of 9 former CDC directors and acting directors blasting Robert F. Kennedy Jr.'s leadership of the Department of Health and Human Services. In a New York Times op-ed, the authors criticized Kennedy for weakening programs designed to protect Americans from cancer, downplaying vaccines, canceling investments in medical research, and replacing experts on federal health committees with what they call unqualified individuals. The op-ed follows the Trump administration's firing of CDC Director Susan Menera's, President Trump weighing in on the CDC and vaccines over the long weekend. Here's what he said on Truth Social. He said, "It is very important that the drug companies justify the success of their various COVID drugs. Many people think they are a miracle that saved millions of lives. Others disagree. With CDC being ripped apart over this question, I want the answer. I want it now. I have been shown information from Pfizer and others that is extraordinary, but they never seem to show those results to the public. Why not?" Question mark, he asks. President Trump saying he wants what he calls the great numbers to be released widely and clear up this mess one way or the other. Of course, the question is if in fact these numbers, whatever he's referring to, and he used to take great credit for the vaccine during the pandemic, are as great as either he or the drug makers say, and he's saying there's this mess inside the CDC, does he then side with drug makers and say, okay, Robert F. Kennedy Jr., we're not doing it this way, or where does this really head?
I think he would like to see the numbers out. There were some reports recently of a meeting that he held in Bedminster, New Jersey, here, and I think the reports suggested that Albert Bourla was in the audience for that, and that he said to this group of people that he was frustrated by this, that he would like to be able to take more credit for Operation Warp Speed, which was widely heralded as this huge innovative program that took place on his watch when COVID was here. I think he'd probably like to see the numbers and see it out there, make it easier to defend.
But I'm saying if he does, then
Nice.
does he get rid of Robert Kennedy? That to me is the fundamental question in all of this. If he's saying this is the answer to that question, is that the implication? I don't know.
Except the Times, I mean, Texas two-step, so that was the editorial page.
Right.
They put, even on their completely objective front page,
Yeah.
they actually said those words, didn't they? They had, so it's they did the op-ed and on the big story today. I looked in the op-ed, I didn't say, is it in today's?
I live in an online world, Joe. So
I know you do, I know you do, don't you like turning things
that's
and?
a day or two old probably at this point.
Is that it? Cause I was trying to follow along, okay, I guess, huh?
At home, pages.
But I didn't need to, because the op-ed is on the front page every day, too.
That's not true. That's not true.
I know.
All right, when we come back, we have more of today's top stories, including diverging moves in the pre-market for NVIDIA and Alibaba. We heard late last week that Alibaba could be getting ready to pose a new AI challenge to NVIDIA. Squawk Box will be right back. Five things to know ahead of today's opening bell. We're watching shares of NVIDIA in the pre-market after closing down more than 3% Friday on a CNBC report that one of its top rivals in China, Alibaba, is developing a competing AI chip. NVIDIA shares this morning off by about 1.5%. Alibaba's Hong Kong listed shares shot up close to 20% yesterday. That came after an earnings report on Friday that showed cloud computing revenue grew by 26% year over year, and that stock is up another 1.75% this morning. OpenAI is reportedly vetting potential partners to help build a massive data center in India. A Bloomberg report says that the site could be among the country's largest, and it could be announced by CEO Sam Altman when he visits India this month. And longtime Vogue editor-in-chief Anna Wintour has reportedly picked Chloe Malle to be her successor. Malle is the daughter of actress Candice Bergen and the late Louis Malle, the famous French film director. She has worked for Vogue since 2011. And the Powerball lottery growing to $1.3 billion after there was no jackpot winner last night. The next drawing will be Wednesday night. That is the fifth largest in Powerball history.
And coming up, the leaders of China, Russia, and India gathering at a summit. We'll bring you the headlines and what it means to U.S. Business leaders and investors. And a reminder, get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We're coming right back.
Russia's Gazprom has come to an agreement with China to build a new natural gas pipeline. That project, which has been stalled for years, is called Power of Serbia 2. The pipe would run through Mongolia. The CEO of Gazprom said that the company could send 50 billion cubic meters of nat gas a year, according to Bloomberg. That news came amid a meeting between Russian President Vladimir Putin and China's President Xi ahead of a major military parade tomorrow in China, marking 80 years since the end of World War II.
Meantime, I want to talk more about that gathering of world leaders in China over the weekend. China's Xi meeting with Putin, in addition to India's Prime Minister Modi. Joining us right now is China Beige Book COO Sharad Akwasi. I want to thank him for joining us and coming in, no less. Nice to see you, sir.
Good to see you.
So, have we sent India into the hands of our enemy, or what's happening here?
No, I don't think so. I mean, look, India and China have an immensely complicated relationship. What's happening right now is you're seeing three world leaders who've, I think, decided to take a hard stance against the president. And of course, you see Xi doing it, playing hardball with the U.S., with Donald Trump, and he seems to be coming out on top. And that's kind of a lesson I think the other two have taken. And I think that's what you're seeing, a alignment around maybe very limited interest, especially with India and China.
So do you look at that meeting as, in terms of Modi, I'm focused mostly on the India piece of this. Mm-hmm. Is this a signal to Trump that we're playing a different game? And does Trump look at this and say, okay, this is a problem for me, or not?
Yeah, it's a signal that we're not going to bend over backwards, that we're not going to get scared and come rushing to offer up deals if you tell us that you're hitting us with 50% tariffs. The real issue is, if we are thinking about India as a potential alternative to China for our supply chains, which, by the way, is, I think, questionable, and we should really think through that.
Questionable meaning we shouldn't.
We should be careful about not thinking of India as a total replacement for China, because that is creating the same problem all over again. We cannot just say, here's another country, we're going to dump all our supply chains there. And I say that because there are people on the Hill, there are people in DC who actually believe that.
And your view is you need to spread it around, or we just need to bring everything back, or what?
So critical things like pharmaceuticals, etc., we need to have them, I think, as close to home, if not at home, as possible. Others, yes, have to be spread around. We just can't keep going down that road of picking the next China and thinking they're going to be our allies. They will be standing with us, no matter, come hell or high water, because that's just not how it works. It was made very clear to us this weekend.
Okay, the implication of India, if India were to stop taking Russian oil, what would it do to the Indian economy? What would it do to the rest of, by the way, Europe and everything else? Like, what does it give us the full sort of picture?
So both China and India have been excessively reliant on Russian oil, and of course, we've talked about this before, Iranian oil as well, right? So I think that's, you're talking about them having to spend potentially a lot more money. They're getting this stuff for very cheap, from what I understand. They're buying it illegally oftentimes as well. I think that creates serious, pressures to them domestically, whether it's on the inflation front, whether it's on, profitability of their companies, et cetera, et cetera. These are growing economies. I don't think they do that. I don't think they can afford to do that.
If you're India or China and you watch this court situation over the tariffs play out, what is the play? We keep talking about this game of chicken that everyone can play with each other.
Yeah.
It's so interesting. The UK, France, everybody else says, okay, we'll go along with this. These other guys say no.
Yeah.
Now the courts have actually it's cutting the right way for them, at least temporarily. What happens next?
So I think the playbook for these countries is not too dissimilar from the playbook that a lot of American companies are following right now, which is that the tariff regime is not permanent. It's not here to stay. That's at least the assumption. I think the court ruling plays into that. I think there's a thinking that a future president can be convinced to roll back or move away from
Can I push back on that, though? Taking the courts out of it,
Yeah.
assuming that it's legal, if it's allowed, it seems to me, maybe I'm wrong, that once you start raising big numbers in terms of revenue annually, $200 billion, $300 billion, whatever this number is, and you've heard the Treasury Secretary talk about it, to me it almost becomes generational. Because if you are in Congress and you have a budget and all of a sudden there's $200 or $300 billion in a pot, and you have to raise your hand and say, you know what, actually, I don't like collecting that money anymore and I don't want that money.
Yeah.
Then you have a whole new problem. So nobody's going to want to turn around and say they don't want it, if in fact the courts rule that it's okay.
Yes, I agree. I think mostly with you. We saw that, right? President Biden never rolled back Trump tariffs. As a matter of fact, he wanted additional tariffs. That stays. I think the core question then becomes what happens to the inflation picture, right? What happens to prices being passed along to consumers, etc.? That's where it gets a little bit more complicated.
So you believe it is inflationary?
It certainly can
I
be.
think it's inflationary, but a lot of people say it's not inflationary.
I think we have to find, we're going to find out, right? So we don't know is the reality, and we're going to find out. And if it becomes inflationary, that becomes a problem then.
But it does get to the point of VAT in Europe, the value-added tax in Europe. You can never undo those things because they are completely reliant on them at this point.
Right. So I think it would make you very unpopular in many ways if you decide to become the president who says, no, we're not going to so-called protect the U.S. economy and we're going to bring tariffs down, etc. So I completely agree this is a very complicated situation. But the thing is, we haven't yet seen the economic fallout, which makes it impossible, really, for anybody to predict where it goes.
Regressive tax.
Right. Yet, at the same time, it seems that a lot of American companies and the heads there are convinced that this is not going to be a permanent situation. I don't know if that's necessarily a smart assumption to make.
I want to thank you for coming in this morning. It's fascinating. I don't know where this is all headed, but you're going to come on back, and I'm sure we'll keep talking about it. Yep.
Yeah, it's a weird discussion. Almost, if you can get addicted to something that's bad for you, I guess. But that does point out, maybe unintentionally, the benefits of the tariffs. Doesn't do as an argument. Coming up, more of today's top stories, plus a pair of big interviews. I got to talk to this guy, Educator. I just ate there yesterday.
I've eaten there a couple of times
have you?
week too.
Did you get it snack wrap, chicken snack wrap?
I did not.
My wife and my daughter love it. They're mad at the person
I have before.
they're mad at the person who got rid of them in the first place. And I need to ask them. McDonald's CEO is going to join us at 8 Eastern to talk about business, strength of the consumer, and much more. And then at 8:30 Eastern, Media Titan John Malone. Stay tuned. You're watching Squawk Box on CNBC.
Some new trial data suggests Novo Nordisk's weight loss drug Wegovy edges out rival treatments on reducing the risk of heart conditions. The company says that continued use of Wegovy led to a 57% greater reduction in the risk of heart attack, stroke, or death in people with obesity and cardiovascular disease, or who were overweight compared to users of tirzepatide. That's the active ingredient in Eli Lilly's Zepbound and Mounjaro. Although these results did come from a real-world study as opposed to a randomized controlled trial, the number of patients recorded events like this was also very low for both drugs.
Coming up, we're going to talk AI as kids head back to school, the benefits, the drawbacks, what teachers are seeing. Got a little bit of a debate going on about all this. You're watching Squawk Box right here on CNBC. We're coming right back.
Welcome back, everybody. Our next guest has an op-ed out today on education and AI that's titled, "We Created AI-Based Learning Tools for U.S. Classrooms. Teachers Matter More Than Ever." He argues that while AI can support learning, it's the teachers who remain the most critical factor in student success. Joining us right now is the author of that piece, Saul Khan. He is the founder and CEO of the Khan Academy, also the author of a new book that's focused on AI and education that's called Brave New Words. Saul, thank you for joining us this morning. And I think this has been a question on many people's minds for at least a couple of years at this point. AI and what it means in the education process. Where do you come down on it?
Yeah, there's a lot of dimensions to it. The op-ed that came out this morning, it's really about this idea that I think sometimes people think that you could just take technology and throw it into a classroom or throw it in front of a student and everything perfect will happen. And in the early days of Khan Academy, I was a little bit naive about that too. I just imagined, well, if you give people a tool that's super engaging and it can do anything you ask it to, they'll learn. But what we've learned over the years, and we now have about 1.5 million kids formally in formal partnerships using our tools, Conmigo, using AI in the classroom. And what we've seen over and over again is no matter how good the tool is, you have to make sure the students are engaged in it. And the single most powerful game mechanic in a classroom is that teacher that is holding the students accountable, encouraging them. And what we're seeing is a lot of districts are trying to adopt some form of an AI tool, either out of desperation because they're afraid of cheating, etc., or because even better, they want to improve academic outcomes. But the ones that are being successful are the ones that are really investing in the human systems, having some form of celebrating the classrooms, the schools that are able to engage well, that are able to drive student outcomes. And it really does happen at that classroom level. It's less about the student than the teacher, and making sure they have the time and the professional development to actually invest in the tools.
What does that even mean? I mean, it sounds good. I can completely follow along. It makes sense to me. But how do you actually get those tools used properly? What does that look like in a classroom?
Yeah, and in the piece I write about Newark, New Jersey, which has been working with us for about 2-3 years now. And at first I was a little bit skeptical because it is a very large, complex school district. But the leadership there, especially in the North Ward of Newark, New Jersey, as they've used Khan Academy, it isn't just AI. It really is AI in conjunction with everything else that can help students learn, which is really just getting enough practice, enough feedback, being held accountable. But what the leadership there does is they're able to track at a district level what's going on in every classroom and every school. And they celebrate the teachers in the schools that are showing a lot of engagement, where they're showing progress. And the ones that aren't, they're not penalizing them because they know those teachers have a lot on their plate, but they're trying to work with them and figure out how they can support them better. And they're in a world where they're seeing well over 50%, really approaching 60 or 70% of students get to a level of engagement where it really is driving their academic outcomes. This isn't just an efficacy study, although we've done that with them. They're now seeing all of their math scores in particular move up across the district, which you're not seeing in most large urban school districts in America.
So how do you take that and just look at kids who have basically been asking some of these large language models to write papers for them?
Yeah, that's a real problem. I've been doing my informal surveys of a lot of college students, and it sounds like they're all doing it. And what I write in my book, first of all, the cheating was going on before ChatGPT. To some degree, ChatGPT just leveled the playing field, or just made it painfully low friction to not use it. And so I think professors, teachers really have to ask themselves, why were they assigning the essay in the first place? If it was to understand how someone can structure their own thoughts, their own knowledge, I think you are going to have to do more of that in class, do more of that proctored. I think at the other extreme, it is a skill to use these tools. At Khan Academy, I know pretty much every firm I talk to, leaders are encouraging their employees to use these tools more. So I think there's going to be a whole other set of assignments where, okay, I don't want you to just write the business plan. I want you to start the business. I want you to do the research. And then there's tools in between. We're developing them as well, where you can write with the AI, and the AI can provide some transparency to the teacher of what's going on.
And so I wanted to ask you, there's a school called Alpha. It's actually a private school. It's open. There's one opening in New York City. I believe they're in maybe half a dozen to a dozen other cities in America right now, where the curriculum is 2 hours a day. That's the entire academic curriculum, only 2 hours a day, but the idea is that they can 10x how quickly a kid learns because they're learning effectively using AI with a computer in front of them. They're not being taught by a teacher. There's no lecture, if you will, and they then spend the next 4 hours after that doing sort of interactive programming and other things around life skills and trying to interact with each other. Bill Ackman's been a big advocate of this school. What do you make of that?
Yeah, I'm reasonably familiar with Alpha schools. They've always been heavy users of Khan Academy in that 2 hour time period, and their view hasn't been that the 2 hours is the only place of learning, but it's where you get that real, let's call it highly concentrated practice and feedback. So Khan Academy has always been a part of what they do. They've also been using the Khan Academy AI tools. They've been supplementing it with their own AI tools. And I am a believer that you can get a lot. Our efficacy studies show that if students are able to put in even 60 minutes a week into that type of practice, that they can accelerate, depending on the study, 30-40% more than expected. And we're seeing it we have my children go to a very similar school out here called Khan Lab School, which I helped start over a decade ago. There's also something we run with Arizona State University, Khan World School, where we've been seeing, I don't know about 10x, but we've been seeing 2-3 grade levels a year for students who are engaged. But to the earlier point, it is all about engagement. If the student, you can have the best tool on the planet, but if you're not really driving engagement in that, then you're not going to see those outcomes. But it's not just those 2 hours. Those 2 hours essentially free up the rest of the day to do more interactive games, simulations, Socratic dialogue, and that's what we do in our school too, at Khan Lab School.
So Sal, one thing that I think about, and one of the, it sounds great in practice. I was talking to an educator who says, look, boys don't like to read, but if you ask them what their favorite things are, they might say, I love Marvel characters and I love basketball. And so all of a sudden, if you wanted to, at grade level, you could generate via AI, effectively choose your own adventure books that somehow merge Marvel characters and basketball, which would then excite kids to read, which would be a great thing. But at some level, do we also need kids, and this maybe goes to grit and everything else, to learn to read and do things they wouldn't otherwise want to do?
I think so. I think we all want our kids to sometimes have to take their medicine, do things that aren't the most pleasant. But I also don't think we have to be super parochial about it, that, the future is also going to be, right now you or I, or maybe let's call it 5 years ago, you or I had to read a dense research paper to understand what's going on now, but now we can throw it into some AI model and it can give us a summary, it can create a podcast about it. So there are ways to consume dense information that, if you're doing it in the workplace, why would you spend 2 hours barely understanding that dense research paper where you could spend 20 minutes and get a much better essence of it? So I think it's both. It's good to use the tools, but if you're really going to test someone's ability, which I think you do every now and then, to understand dense text, to understand data, then yeah, you have to do it in a proctored way or with a tool that has more safeguards on it.
Yeah, like no electronics at all seems like the best way. Pencils down.
Yeah, at our school, somewhat ironically, we don't, we're very careful about when the kids use electronics. They're not allowed to bring their phones. We have analog hour for the kids where they have to be bored without a computer. And there's other things they can do. They can play board games. They can draw. They can read a book. So I think those types of skills are really important. And but intelligent use of technology can also really accelerate things.
Okay, Sal, thank you, Sal Khan. Always appreciate you coming on, Sal.
Thank you.
It is just past 7 a.m. right now on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Sorkin along with Joe Kernan and Becky Quick. We are all back, and there's a lot of news taking place this morning. Some news that just broke earlier this morning. Kraft Heinz now trying to separate into two companies. The names of the companies will be determined at a later date, but one, which is referred to as a global taste elevation, that's going to focus on shelf-stable brands like Heinz and Kraft Mac and Cheese. The other is going to comprise the North American grocery business, including brands like Oscar Mayer, Kraft Singles, and Lunchables. Expected that deal to close the second half of next year.
They did a bang-up job when they got together coming up with a new name, I think.
Putting that together, you mean?
Kraft and Heinz.
Kraft and Heinz, and then I don't know what they paid. I don't know what they paid for that.
The business is the business.
Brilliant.
By the way, of all the businesses, the ketchup business is the business. You would think that ketchup would be like a generic thing, but somehow Heinz ketchup is the game.
Yeah, the way you combine ketchup and catsup is what I'm always struck with when you, right? Because it sounds like you're saying ketchup with something, but it
is ketchup.
That stock, as you saw, down
ketchup.
20% over the
Catsup
year.
or ketchup?
We got some other breaking news this morning. We can get maybe AI to speak for us right here. The company just out with a blog post detailing how it's going to work to try to improve the behavior of its AI models during what they're describing as sensitive interactions. This follows, and we talked about it on this broadcast, actually had the lawyer at the table with us last week, which was just really such a tragedy. That lawsuit filed against the company last week on behalf of a parent of a 16-year-old who committed suicide. The complaint accused ChatGPT of wrongful death, design defects, and failure to warn about risks. And you may recall the student actually was showing ChatGPT pictures of the noose and literally asking the ChatGPT whether it would hold him, how to do it. I mean, the whole thing.
But
And it
I
went all the
gotta
way-
get caught up on that today. How did AI try to get him to keep this away from his parents?
There were all sorts of dialogues about whether you should tell your parents not to. I mean, it was wild, and just in the most terrible, terrible way. I'm surprised that we haven't heard more from OpenAI about this, but this is their first shot across the bow today. They, by the way, they're not trying to set. From what we understood as of last week, they weren't trying to settle the case or anything else. In the blog post, OpenAI saying that over the next 120 days, it's going to prioritize expanding interventions to more people in crisis, making it easier to reach emergency services and expert health, enabling connections to trusted contacts, and strengthening protections for teens. That's important. The company says it will be guided by a council on well-being and AI, which includes an expanding network of more than 90 physicians across 30 different countries. It's going to roll out new parental controls as well this month. The biggest issue with all of this stuff is the longer the conversation goes on, the more potential for the degradation of the controls to work. So if you were to ask it in the first 10 sort of conversations about something that it knows it can't really answer, it'll stop you. But if this conversation goes on, in this case, for months, you can see how the system starts to, when I say degrade, meaning the guardrails of things it shouldn't talk to you about or would otherwise stop you on day one. If you'd gone on and said, I need your help building a noose, it would stop you right now. But if you talked it and talked and talked and talked and talked to it for through on the same thread for a very long time, that's when things go wrong, and that's what they're going to try to fix.
I don't understand.
Because the way this
The
whole
algorithm?
system algorithm seems to work is they can put certain guardrails on for certain types of conversation, and so when you're having this dialogue with it early on, if you ask things directly,
But you normalize it by bringing it up again and again and again. And
I
then it
don't
drops
understand
its-
how it happens. My understanding is, and by the way, I've had this experience not with terrible kinds of questions, but I've had this experience where after the 30th question, clearly the quality, even the quality of the answers degrade sometimes, and things start to break. So that's sort of where I think
This is like
We need to figure
huge
this out.
Pandora's box, too, because you can imagine, I could think just off the top of my head, come up with 10 things that you wouldn't want people looking into, building a bomb,
But you can find those things on the internet.
I know you
right
can,
now. I guess the
but
difference is
how do you don't want it to be where you're deciding what people can see and what people can't see, and you're back to the
Well,
whole
this goes back to the
censorship
question.
debate
Sure,
again.
minor.
Well, but right, and that's a separate issue, which is what I think is being addressed this time in terms of parents are going to have certain controls over it. It will alert the parents if there's questions asked that are dangerous or other types of things, and but that gets into a whole other privacy question for a lot of people as well. So it's going to be interesting to see how this all plays out. Some of these systems, like Anthropic, is very cut and dry. They basically stop any kind of conversation about certain types of things to the point where some people think it's not useful. And so this becomes this very interesting question of uses being useful versus dangerous, and sort of where that line is, the context of the way you're asking the question. If you were asking a question about hopefully not building a bomb, but in some kind of context where you wanted to learn how to do something for a science project,
Yeah.
that might be one instance.
But if you're asking
But
it
if you're asking it,
and you're an adult, would it alert
correct.
authority?
And so these I don't think it's going to alert authorities in the same way, unfortunately, or
The
fortunately,
internet.
depending on how you think about it.
Yeah.
If you were to search on Google, Google's not sending a note to the authorities. We've talked about, I know we've had debates about gun use, but a lot of time, almost every time there's been a mass shooting in America, the shooter who's gone and killed lots of people has taken to Google prior, because it shows up in all of the evidence afterwards, asking all sorts of wild questions about whether credit card
I guess
companies know
that's
about the
that's
guns
the question.
and
What is the
everything
difference
else.
between a Google search and an AI large language
Well,
model?
the large language model can, in this case, and what we saw last week, and hopefully folks can go back and watch the video, because you can really learn about the whole case, and you can go online and learn about it as well. This was encouraging him to do this.
Oh my
I mean, this was a very different scenario,
Well, that's a whole different.
and that's different than a direct search. So.
That's horrible.
It's just another example of we really need to think about what we're doing here. Although we don't want to get behind.
Well, and the other part is there are people, putting that aside, there are other people who are using these services, and it's quite helpful to them, right? It's cheaper than having a psychiatrist, and it's actually, they're finding it to be useful. And the truth is, 99.9% of the people, it is hopefully helping, but then the question is, how do you prevent this kind of instance from happening?
You wonder how much it's actually helping anyway. It's
Well,
there are
that's
very
always a
strict
question.
guidelines for therapists and counselors
Right.
and psychoanalysts.
Right.
Uh,
Well, speaking of psychoanalyst, Steve Leisman has wear that hat occasionally. Wall Street awaiting a potentially game-changing ruling from a D.C. District Court judge that could give President Trump a majority on the Federal Reserve Board. And senior economics reporter Steve Leisman, did you tell anyone how we were like Jackson Hole Bros? Steve, did you mention that? Anyway, how we hang out together and stuff?
Joe, I sort of thought what happens in Jackson Hole stays in Jackson Hole.
Good point. Good point. Let's. You know what, Steve? We'll always have Jackson Hole. Let's just leave it at that.
We will. And, you know, exactly what was going on by the fire there, Joe, and what you were doing, I don't really want to know, you know?
Go ahead. And you know what? This is like a tease. It's like a tease. You know, people are wondering.
It is. We might get to it one of these days, but Joe, let's talk about what may matter to investors more than all that. There are high stakes for the ruling on Fed Governor Lisa Cook for President Trump. Replacing Cook would give a majority on the board and maybe the only way for him to gain that majority until the very end of his presidency. Go through the math here. Non-Trump appointees are four: Powell, Jefferson, Barr, Cook. The Trump appointees, Bowman, Waller, and Mirren. This would be true through January of 2028 if Cook stays and Powell decides to serve the remainder of his term as Fed governor, which ends in 2028. Now, if Lisa Cook were to be fired, that would shift to 4-3 if Cook is removed and replaced by the president, with three non-Trump appointees, Powell, Jefferson, and Barr, and four Trump appointees, Bowman, Waller, Mirren, who has been nominated, and a replacement of Cook. If Powell leaves when his term as chair ends in May, as has been traditional, the president would have a 5-2 majority. The importance of this could be magnified in March. That's when the Board of Governors votes on whether to reappoint the 12 district bank presidents. That happens every 5 years, just so happens to happen on President Trump's watch in March of 2026. So the president will have a cudgel over bank presidents up until their reappointment. Whether this matters could depend on whether bank presidents vote to preserve their jobs instead of based on their economic judgment. It will also matter how the judge in the Cook case defines what is sufficient cause for removal, helping determine just how much authority a president has to fire a member of the Board of Governors. Just because a president appoints a board member doesn't mean they're going to endorse the president's policies. Biden appointees voted for hefty rate hikes under his presidency, and one of two Trump appointees supported that controversial 50 basis point rate cut before the November 2024 election in September. So there are still people standing between the policy and what the president may want. Joe?
Yep. This is like a, I don't know what you'd call it. It's episodic, I guess. And I don't know how it finally plays out at this point. We were just talking about it with Stephanie Link. It's a weird time to be cutting rates. Now we're sure we're going to do it, and we still don't. I guess Friday we'll get a better idea, Steve, about whether the economy is still. I mean, claims still look good, right?
Claims have been good, Joe. That's a good point. You know, and we have a screen here on the data that's coming up, and all that's going to be really important. We're looking for around 75K on jobs this Friday. That would be okay. Then you've got this big preliminary benchmark revisions, which Governor Waller's made a lot about, then a PPI and a CPI all ahead of that September 16th meeting. So there's a lot of data to come, and then you have a few more. Joe, I wish I had a chart on this, but I don't see a big difference in how the market is pricing in this new potential Fed board. I got 337 for June of 26, going down to 294. So another 40 basis points built in, down below 3% by the end of next year. But I'm not sure that suggests crazy dovishness on the part of any board right now. So you do have gold surging. You've had some weakness in the dollar, a little bit stronger this morning. That does reflect concern about maybe looser monetary policy. And of course, the 30-year is higher. So all of that points to it. But when you look specifically at the betting in the Fed funds futures market, you do not see a crazy dovish outlook. You do see a dovish outlook.
Yeah, we don't, things come out in dribs and drabs about, oh, we're now considering this person to replace Jim. We haven't had any of that either, or when, or the timeline, or whether it's been narrowed down from, what were we? We were at, like, I don't know, what was the last number, 11 or something? And then the president says 4,
Yeah.
I don't know.
Well, just so you know, Joe, we are awaiting a brief to be filed by the Cook camp. We believe sometime this morning, and some combination of the great Eamon Javers or myself will bring it to you. And so we'll be following these blow by blow, and then we'll see if the judge puts in a temporary restraining order or allows the president's firing to go forward. I believe at this point she is technically fired. I don't know if she's been to the office or what would happen in that case. But
I was talking
the
about
Fed has
Jay
said,
Powell.
hey,
I don't know what happens with her, but I was talking about who's in the running, who's the latest. How does that horse race?
oh, right.
How is that
Yeah,
getting handicapped? Right.
it's still 11. You didn't miss anything when you were away. We still have 11. Maybe there's more people there.
We're both
We're
away.
still
Oh,
alive.
you got back. You came back. Though. When did you come back? You come back on Sunday?
I got back on Tuesday. I did some fishing in Jackson Hole before I left.
Well,
I
I know
understand
you
you
did.
might have done some
I
golfing.
know you did. Suddenly, I've got a family member who thinks she knows how to fly fish. No, but she did catch what are they called, cutthroats or something? What the hell is that? Is that
Cutthroat. Yes.
yeah,
Cutthroat. It's a trout.
it is. Very good. All right. Bad for the golf swing. Because it does an outside-in movement. All right, see you later. Thanks, Steve.
Swedish fintech firm Klarna is looking to raise nearly $1.3 billion in its long-awaited U.S. initial public offering, according to an official filing out this morning. Klarna plans to offer over 34 million ordinary shares that are priced between $35 and $37 a piece. The company will list its shares on the New York Stock Exchange under the symbol KLAR. When we come back, the S&P 500 notching its 4th straight winning month in August. We will talk to the Wharton School's Jeremy Siegel about his expectations for September trading. And later, the CEO of McDonald's will join us live right here from the Squawk set. We'll be right back. take a look at the futures this morning. Down 255 points for the Dow futures right now. S&P futures down by 40. The Nasdaq futures off by about 215. The market focus this week will be on the monthly jobs report on Friday, especially after the surprisingly weak reading we got last month. Joining us right now is Jeremy Siegel. He's chief economist at Wisdom Tree and professor emeritus of finance at University of Pennsylvania's Wharton School of Business. And Jeremy, we're down on this first trading day of September, probably because of questions about the tariffs, but I don't know, we're also at relatively high levels. How are you feeling about things right now?
Yeah, and probably because of September.
Right.
being historically really the worst month of the year. Listen, certainly we could have a pullback. I mean, I still think the bull trends are intact. I know you guys mentioned the Wall Street Journal article this morning about all-time high, so I took it out and read it, and it said, oh yeah, it's all-time highs relative to sales. Well, I thought we, value stocks on earnings, not sales, and we're way, below any all-time high in terms of earnings. Not that it's not an expensive market, but once you take out, and even that article admitted, once you take out the Mag 7, we're only, slightly above a longer-term median. So I still think this bull run has place to go. Revisions are still upward. I mean, there's a lot of things that can derail it. I mean, the tariff development is very interesting because I think it's going to go to the Supreme Court, and I think the Supreme Court's going to throw it back to Congress and say, have the Republican Congress say okay, and then it'll go through, and that's going to be very interesting politics, I think, in the second half of this year.
It's just the Senate
I think
that
that's
would
going to be
sign
a
off
really,
on it, right?
interesting sort of development.
Yeah, I mean, he has control, the party has control of the Senate, of the Congress. We'll see if they would choose to fight him on that or whether they say, okay, we go along with what we've seen to this point. But I want to go back to what you just said, this idea that we're at the highest level if you divide by sales. I mean, we mock people when they look at sales. We say that's not the real number. You're right. If we're looking at earnings, that seems like the much more important number to bear out.
And the biggest companies you're talking about, the Mag 7 are the richest in terms of price to sales probably too, because of all the potential.
And it's because the margins of those companies are so high. Margins of digital tech companies have always been the highest. So if they're predominant, you're going to get a result such as this. And I think that's built into tech. Tech has very, very high margins because of the way accounting goes and the way globalization and how you can replicate at virtually no cost. All you need is those customers to come. So it's a very different sort of thing than looking back at a steel company or an auto company. And put them all together, I think gives a misleading look at the market.
So you're feeling pretty good about things, even though you look at the calendar and see it's September.
Yeah,
And
again, I wouldn't be surprised. In short run forecasting is hard, but the upward revision of earnings, after it took the hit in April, and we still have to see. I mean, there's a big dispersion. I think one of the biggest dispersions I've seen in GDP for this quarter. I mean, it's true that the Atlanta Fed is looking like 3.5. It sort of shocked me. I think Goldman's still looking at 1.5. J.P. Morgan is sort of in the middle of 2.5, and I've never seen such a dispersion. We're more than 2/3 of the way through the quarter, outside of recession periods, which of course are very different. So I think there's still a lot of questions. Not all those price increases are yet recorded. What is going to happen in the second half of the year? I think that's really the biggest question, and that of course is still linked with the tariff question of the legality and how it's going to flow through to the consumer.
so obviously a lot of questions, but you're still feeling pretty good, and I think we'll take it at that,
I mean,
Professor.
I'm still positive on the market. At this time, of course, any sort of developments could come that could change that, but what I see is still constructive, very constructive.
Professor Siegel, thank you. We will talk to you again very soon.
Thank you very much.
Coming up, we're going to do a deep dive into the opportunities and risks of alternative investing. This as access opens up to offerings that were traditionally reserved for wealthy and what were called, quote unquote, sophisticated investors. We're going to explain what all this means. And then later, you don't want to miss this conversation. Liberty Chairman John Malone, a legend in the business. He's going to join us, talk about his new memoir this morning and deal making in the media world. We're going to get into all of it. Squawk Box, come right back. Welcome back to Squawk Box. Alternative investments like private credit now more available to retail investors than ever before. It's a revolution really is taking place in finance. And Robert Frank is joining us right now to talk about the launch of CNBC's new Inside Alts newsletter, which gets into all of this. And the revolution is here now.
Yeah, Andrew, revolution is a really great way to put it, because from private equity and private credit to venture capital and hedge funds, the world of alternative investment is going mainstream. Total assets under management for alts has more than doubled over the past decade, from $7 trillion to $18 trillion today, expected to top $29 trillion by 2029. Now, once reserved for institutional investors and the ultra wealthy, alts are now moving down the wealth ladder. Apollo Global CEO Mark Rowan told me that retail investors are the next wave.
We used to have 3 flavors of ice cream: vanilla and chocolate, stocks and bonds, and a little bit of strawberry alternatives. We're about to move to Baskin-Robbins. Gradations of each of these things. And we're moving to a place where investors are being asked to consider something new. Trust, alignment. This is going to take a long time to have a shift. Good news, it's been happening. We're watching it take place in institutions. We're watching it take place in family office. I believe it's going to take place in individual investors.
Now, of course, high fees, less liquidity, less transparency, and not great returns have all been risks in the alt space recently. I asked Rowan and pressed him about the lack of transparency compared to stocks. Here's what he said.
This notion of lack of transparency just reflects an idea that's rooted in 40 years ago history. It's just not the case.
Well, but we don't have the same level of disclosure for private companies, private borrowers, than we do for the stock market, which have to report quarterly earnings, anything that's material to the company, right?
Absolutely. But how do investors invest? Do investors buy stocks today? Or do they buy indices? Do people actually do the work? I don't think so. And so there's not that there's no information, there's just less information.
Such a smart guy. Really fascinating interview. Now for the full interview with Mark Rowan and our continued coverage of the alts revolution, you can sign up for the Inside Alts newsletter at cbc.com/insidealts. That's cbc.com/insidealts.
Are you writing 2 newsletters now?
So yes, thankfully this one is with the great Leslie Picker. So Leslie and I will both be doing Inside Alts, but this will be 2 newsletters. Yeah, I'm a sucker for punishment.
I'm impressed. That's fantastic.
Yeah, and this is sort of an offshoot because alternative investments have really been core to the portfolios of the wealthy.
Right.
So for the wealthy, this world is more important to them than what happens in the stock and bond markets. So that's why I've been spending so much time over the years covering this. And because it's becoming so important in the financial landscape for both corporate borrowers and investors, we just decided, look, let's really dig deeper into the world of alternative investing, both for investors and for corporates.
How far are we away from changing the definition of what it means to be a sophisticated investor?
Well, that's already been changing. I mean, you see Congress taking actions over the past decade that have reduced both the financial threshold as well as the educational threshold, and now there's even more movements to say, look, basically let's just do away with that. So I think it's been watered down over time, and I think with this executive order from the White House that's saying, look, we want more alts and 401ks, that will start the process toward having more retail investors, often through partnerships, get into more alternative.
What do you make of this idea of some folks now we talked about it before, tokenizing private assets, and whether that is just a complete workaround and should be illegal, whether it is illegal, what is it?
Well, you've been asking the question about should everyday investors get more access to private companies, or should private companies be more public so that we can get access to them? And Rowan said he actually thinks that rather than private companies going public to give that access, he's going the other way, where more retail investors, whether it's through tokenization or just securitizing these markets, making them more tradable, more liquid, more transparent, that basically we're going to see more and more companies stay private, but more and more public investors retail investors getting access to those through funds, through trading exchanges, through tokenization.
He thinks that doesn't pose a challenge because nobody's looking at the numbers anyway. I mean, that was his answer.
Kind of his subtext. Well, in a totally correlated indexed world where people are just buying the index, which are now dominated by 10 tech stocks, his point is that we're not doing the research, we're not really selectively picking stocks anyway. Everything's correlated. So the idea that stocks are safe, privates are risky is no longer the case.
Although privates are hard to get out of. That's the problem.
They are harder, as we've seen now with the college endowments,
and universities that have gotten
trying to get out of that. And so that is one of the big arguments that people make about retail investors getting into alternative.
You're more likely to need your cash.
If you need your cash. Now, if you're a young investor and you've got a longer time horizon, say decades, and you're not going to need your money on a Tuesday, then these are perhaps better long-term returns for you. But liquidity, especially as it's been highlighted by these endowments, is one of the big draws. A lot of family offices, they don't need liquidity, but they are furious that they have not been able to get their money out of private equity for the past 5 years.
Right.
How much, though, is this an effort to get into what are described as the semi-liquid public instruments for folks like an Apollo? Obviously, Blackstone's already done it, and others.
So semi-liquid public instruments like?
BREIT, obviously, is one. Obviously, there's a whole bunch of these sort of semi-liquid instruments that are sort of quasi-public.
And that's where the industry is going through these partnerships, through securitization, through starting funds. The question is, you're supposed to get higher returns in alternatives because of the illiquidity.
Yeah.
If you create these hybrids where you're getting liquidity,
but you're not getting higher returns.
You're also not going to get higher returns over time.
Well, the worst is you don't get better returns.
That's right. And you've got high fees, and the fees are another thing that Mark and I spent a lot of time talking about.
Sophisticated investors, that sounds like jumbo shrimp to me. And over time, a lot of times retail investors have been there for moves that Sophisticated. I think sophisticated investors mean that they got enough money that they can lose it because they're no better.
That is often
they're
the
no
case.
better than anyone else.
Certainly. So, although if you look over a 25-year
Over time,
period,
are there such people that? Because we have a hard time finding them to book on this show in terms of guests.
sophisticated investors.
Yes,
Meaning you beat the
Successful,
averages
yeah,
over
successful
20 period,
investor.
20 years at a time or longer.
Yeah.
that was it's like a handful.
It's more relation to what is your
How
time
much you can
horizon.
lose,
So
too,
the
yeah.
richer the investor, the longer you're investing for generations. When you're a rich investor, so you can afford the illiquidity. You can afford,
If you're young, if you're not qualified, you can't get into these things. So it's not just how long you can be there; it's how much. It's if
Well,
you have
you
enough
can. If
dumb money
you're
to
young and
lose.
not qualified, there are more and more, let's
Yeah.
say, private credit. You can get into private credit now with a
Right.
minimum of $10,000-$20,000. So again, through these funds.
Obviously, this is a rich, fertile ground. We love talking about it. We love that you're writing about it. And
Thank you guys.
Thank
We're
you.
excited. Leslie and
Thanks,
I are
Robert.
excited.
all right, we've got some breaking news from McDonald's, the fast food giant working to lower prices. It's going to be bringing back the extra value meal for 8 of its most popular menu items. Starting next week, it will offer the discounted pricing, including a $5 sausage McMuffin meal and an $8 Big Mac meal. It's been a big thing that's been talked about. Chris Kempczinski, the CEO, talked about it on his last earnings call, just about how they're really trying to bring costs down. It's tough to do because they've had to work it out with the franchisees, but we will have none other than the CEO, Chris Kempczinski, joining us to talk about it right here on the set at Squawk Box. That's coming up in about 24 minutes time, 8 a.m. Eastern time.
An activist investor, Elliott Management, built a roughly $4 billion stake in PepsiCo. The Wall Street Journal report says the stake would make it one of the PepsiCo's top 5 active investors and one of Elliott's largest stakes ever. The hedge fund plans to push for changes to boost the share price, but it hasn't detailed exactly what those changes would be. Coming up, Ray Washburn is going to join us next to talk about doing business in America. He's the chairman of Sunoco's board, also a board member at Red Lobster, and got his tentacles all around the economy. Tentacles, yeah, like lobsters. We're coming right back. Joining us now to discuss the state of retail, real estate, industrial policy, Ray Washburn, Vice Chairman of Gillen Capital and Gillen Property Group. He's also Chairman of the Board of Sunoco and a board member of Red Lobster. Last time, Ray, it's good to see you in studio.
Thank you.
Last time you talked about how many companies would probably be able to deal with tariffs so that it wouldn't cause inflation. And you're a big backer of President Trump and everything else. I don't think we've talked to you since we started seeing these much talked about and controversial forays into industrial policy. And I would say, look, when we did the CHIPS Act and we decided to just hand out all these subsidies based on, DEI and whatever, based on child care, that was bad. And what we did with Intel, we already picked the winner. I think getting an equity stake, it's less bad. It's not perfect, but I'd much prefer to actually have an equity stake than to just give it free to Intel. Do you back any of this industrial policy?
Well, when I was in the government, I ran the Overseas Private Investment Corporation. We didn't do grants or giveaways or even take stock. We made loans. And I believe that I'm not a big believer in the government taking stakes in
So you
companies.
but you have a problem with that?
Well, look at the oil business when we were crushed back in the early 80s, late 70s, early 80s. We had to figure our way out of the bag. The government wasn't there to prop us up and get us out. And a lot of companies went bankrupt and they worked their way out.
That's the way it's supposed to work. You should be able to fail, right?
Yeah, exactly. It's just like the banks, too big to fail. I mean, I live in Dallas, and we have a lot of regional banks there, and they've now got to compete with banks that don't have any risk of failing. I mean, how is that fair?
Right. I also made the point that if you read the papers or watch the news, the end of democracy, chaos, it's really staggering. That's all anyone wants to talk about. The market continues to do highs. We've got almost record low unemployment. Maybe inflation is starting to pick back up again. But how is it? What is the market ignoring? And is it whistling past the graveyard? Is there a comeuppance?
Well, look, a black swan event. I'll give you an example at Sunoco, okay, in gas prices. So this year, gasoline price, we're one of the largest sellers of gasoline in the United States, is flat for the year. Prices, though, are down 10, 12%. What does that tell you? Well, the American consumer is still driving, even though prices, it's 10 or 20% less cost to drive than it was a year ago. That means they're driving less. Alternatively, diesel sales are up 3.5% this year. What does that tell you? American commerce is moving, and you see it in the stock market. Is that moving because we front-end loaded the supply chain this year from the beginning of the year, the first half? Or is that more onshoring, meaning we're moving more things between factories and warehouses within the United States?
Do you know?
That's a number. I really don't know. Our refineries and the pipes are full right now with diesel because we have such demand. Now, as we go into the later part of this year, really the third quarter, let's see where diesel sales go. If they come down off 3.5%, that's a problem. If they keep up, that means I think it's a lot more onshoring going on.
Is this a time that the Fed should cut rates with this economy you described?
Well, we'll see. If you look at like retail sales, we're in a K-shaped economy right now, and I hear a lot of your speakers talk about that. Our high-end, I own luxury shopping centers.
Right.
We're having double-digit sales increase this year. Rolex, a lot of these people can't keep inventory in. You go to the other end, like our Red Lobster, which is selling to middle America, sales are flat this year. We're really struggling to keep sales flat. Everything is massive discounting going on in the middle market, okay? You're gonna have a McDonald's guy on later, and you're gonna find out they've raised prices so much, they're really bumping right up against us in casual dining right now. So we had a crab fest go on this summer. It was great for sales.
You had a crab fest?
Yeah, well, not a shrimp fest. That was last company, but a crab fest, which you missed.
I missed that completely.
Wow. But
we got Crab Fest here every day.
Yeah, crab.
that's true. Well, we can deliver some. We got a store close by here.
Yeah,
but
more crabs.
If you look at discounting across casual dining, that is what keeps people coming back in. Look at Brinker. One of the hottest stocks in last year was the parent company of Chili's. Why?
Right. Yeah.
Well, they came out with this. Well, they're $1 more for a hamburger at Chili's
than McDonald's.
Plus, they had an incredible social media campaign going on. All these under 30-year-olds wanted to go there.
They didn't change their logo either.
They didn't change in. But then in our restaurants, look at liquor sales. Beer sales, first quarter this year, were down 8%. Second quarter, they made it all back, and now beer sales are flat for the year. What does that tell you?
I don't know.
People are trading down from a $12 margarita to a $6 beer. So there's a lot of trade down going down. So when you look at restaurants, special casual dining that sells alcohol, what's that alcohol mix being made of? The other thing is these kids say are drinking White Claws and these little, the drinks that are pre-made cocktails.
Right.
So that number's a little off because you buy a handle of Tito's, you get 17 drinks out of there. You buy a 4-pack that at a store just for the evening, if you're under 30, that is enough for that night. But the sale looks like you only sold 4 drinks versus a handle that is 17 drinks. So there's a lot of, funny things going on with numbers right now, I think, in the changing buying habits of the American consumer.
Changing buying habits, but consumers that are under pressure. And I
They're
asked
under
because
pressure.
we're going to talk to the McDonald's CEO.
Yeah. Like in Europe, if you go to Europe, everyone has a small refrigerator. Why? They buy enough food for 1 or 2 days and they go shop all the time. United States, we have these huge Sub-Zeros filled with stuff. Same thing in alcohol sales right now. Kids are going out buying just enough for that night, not taking the handle of tequila, drinking 3 or 4 drinks and sticking it under the cabinet. It's like buying for the moment is what's happening right now.
We talked earlier about the plus and minuses from tariffs. I don't know whether when you came on, you were advocating for tariffs across the board to recalibrate global trade. You are more saying that it's manageable, and it does raise a lot of revenue, but there are inflation worries. And where are you on
I'll
tariffs?
give you a specific example. We're the largest buyer of shrimp in the world, Red Lobster.
Right.
Okay? We're buying it all from China. So when I was on your show last, we shifted everything to India. What's happened now? India now is 50% tariffs. Now our buying has all shifted to Central and South America and Guatemala and those countries. We really haven't seen an impact in price. So the buyers and procurement guys are like, okay, not so bad. The other thing is I'm more concerned about the cartels than I am with the tariffs, because things like avocados, that's controlled by the cartels. Trying to get that. Anywhere you go now, you get avocados, right? Look at the prices of those things, because the cartels are controlling the supply in Mexico. Look at
Drug cartels are controlling the supply of avocados.
Oh yeah, they get them off the farms and they control, bribes and stuff to get trucks through and all that. I mean,
You mean they're
bad.
trading avocados for drugs?
No,
Or
for
they-
cash.
For cash,
Cash.
which then they're used to pay off people for the drugs.
Well, look at the old Fulton Fish Market here in New York back when the mafia controlled that. It's the same idea with that. And look at the beef herds. You see meat prices gone up. Why? We
Right,
had a
ice
screw room.
level.
We had a screw room problem. Screw worm problem.
Yes.
What does that cause from? The cartels have moved the herds from Mexico in the United States. They come in, they're not checked, they're filled with screw worms. That's gotten all to our herds. That's where all that's come from.
I thought it was also because of the drought, because prices have gone up on those
Well,
bins.
yeah,
It's
a
the
lot of
smallest
things-
herd we've seen in a long time.
The problem is the screw worm right now, because that's getting into, that infects, if that gets into a feedlot, that can infect.
What happens if you're a consumer who eats a screw worm?
Oh, you don't. I mean, it's FDA. I mean, that's all tested before it comes in. But it's infecting the herds. And that's, a lot of that is caused by things that have nothing to do with the tariff.
Oh, happy breakfast.
Yeah. Well, yeah. Throw some sausage. It's pork.
Give me more.
Wow.
Give me more what you want to talk about. What did we miss that you want to talk about?
Well, I'll tell you, let's talk energy real quick.
Okay.
So, half the production in the United States, 13 million barrels a day, come out of the Permian Basin in Texas.
Right.
Half the production in the United States since 2020, which is the other half, has been flat. People don't realize since 2023, half the production's come online. Okay? If we don't continue to drill, the depletion rate and the decline rate, that's one good thing the president's done with drill, baby, drill. We have to keep up production right now, and our market's getting flooded, from other markets right now, OPEC, Guyana, and other places, with oil. We cannot let our oil and gas industry in the United States
And it will.
get decimated.
Prices where they are.
Price around $60 is okay.
Is that all right?
Technology is coming in a big way. AI, people don't realize, it really helps on drilling oil wells and maintaining wells and production out of wells and assessing where to drill and things like that. AI is big, so it's going to bring the lifting costs down. But we have got to continue in the lower 48, continue to replace our production, because it's going to deplete incredibly fast.
I was going to a different place. It's like a geopolitical question.
Sure.
You think about India
Right.
and its oil. What do you think we should be doing?
I don't think we should be letting them get them from the Russians. I mean, that's
And what do you think it does then to the rest of the global economy if we?
OPEC will just crank it up. I mean, that's the closest delivery point. It's right there, and so.
So you think it would have no impact?
I don't think it would.
And what about on India itself? Because you think it would have an impact on India. That's why they're buying the
On the
oil.
Russians, well, look, oil is something in the ground. You don't want to put a straw in it. Once it's gone, it's gone. And so, the Saudis would like to maintain price and maintain inventory as long as they can, because I mean, they're I think we're going to hit peak oil in the United States now in probably 2040 now. I think it's been pushed back because of technology, but it's coming, and they see that.
Okay, so we got Red Lobster with you, we got Sunoco, we can figure out.
Luxury retail sales.
Luxury retail sales.
Yeah, and luxury's
It
gonna-
is a bifurcated economy, but
It's
it's still good though, overall.
Yeah, the economy's
things
look
are
at the
great.
stock market. I mean, look, you guys run a scorecard. The scorecard is what's the stock market, and the stock market likes
Unless
what's.
it's up for all the wrong, that's what we always
Well,
say.
look-
I don't believe that, but I
Let
think
me
the
tell you, a
market.
black swan event could be if we do have an energy hit and gas prices go up, say $1 a gallon. What happens? Goes up $1 a gallon. That's $30 less for that waitress from Red Lobster to fill up her car. That's $30 less to go to
What's
Walmart.
going to cause us, you reason?
Can anybody ever see those?
No.
That's why they call it a black swan. And so, I mean, it could be a massive hurricane. It could be.
But it's not going to be tariff inflation.
We're able to squeeze, like paper products. We use a tremendous amount of bags, cups, and things like that in all our restaurants. We've onshored all that.
Yeah.
Onshored all that. We have been, because of freight cost, and once you leverage it out against tariffs, it's actually cheaper now in the United States. Our manufacturing economy in this country has really stepped up.
What's amazing is that we can do all these backflips looking for all these different. It's always energy. Energy is what causes inflation.
Well, it does. And look, from the consumer, you're always talking black swan events, what might happen.
Yeah.
That energy goes up $1 a gallon. The consumer feels a little bit pinched. There's not a lot to tip this thing over.
Right.
But that's why it's called black swan.
All right, come back.
All right.
Because you do get back here.
Yeah, I went to U.S. Open last night, so that was
Yeah,
it's all kind
Good
of a
reason to
dud.
be in the city. Well, I mean, we're a good reason, but that's a good reason too.
The city is hopping right now. I tell you, people that haven't been to New York in a while, it's a lot of energy.
A lot of energy. Ray, thank you.
All right,
Appreciate it. It's great to see you. We got a striking report on the Manhattan office market recovery released just moments ago. It's this week's property play. I want to get straight over to Diana, who joins us now with the numbers there. Diana, good morning.
Good morning, Andrew. Manhattan office leasing increased more than 20% in August compared with the July and was well above the 10-year monthly average, and that's according to a brand new report from Colliers. If demand continues at the same pace for the rest of this year, Manhattan's yearly volume would top 40 million square feet for the first time since 2019. Okay, what's driving it? Tech. Amazon alone has leased, subleased, or entered agreements with co-working spaces for over 1 million square feet since November of last year. And also the legal sector, which leased a record 4 million plus square feet in 2023. It was a little bit lower last year, but still well above 2019 levels. Now, there has been a flight to quality, that is to mostly newer buildings, and that has made supply tight. The availability rate of newer office space dropped to 6.7% compared with the rate for pre-war buildings at 17%. Now, the average asking rent because of that low supply for Manhattan offices was up 1% from July. That's actually pretty big. Rents are still 6% lower than March of 2020 when the pandemic really hit the U.S. And office conversions are also impacting supply and pricing. Colliers tracked nearly 9 million square feet of office space removed from the Manhattan market over the last 4 years. Now, there's much more on this story and other great stories in the Property Play newsletter, which drops in about 10 minutes. Go to it, cnbc.com/property play. Back to you guys.
Okay. Diana, thank you for that report. It's fascinating stuff, and there's a lot of energy here in New York. Thanks.
When we come back, a federal appeals court ruling that President Trump's sweeping tariffs overstepped his authority. The attorney for the plaintiffs in that case will join us next. And still to come this morning, McDonald's just announcing that it will roll out extra value meals, lowering certain menu prices. The CEO, Chris Kempczinski, will join us right here on the Squawk set. We'll be right back. is just before 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Bill Kernan and Andrew Ross Sorkin. And if you take a look at the futures on this first trading day of September, you'll see right now we are in the red. In fact, things have gotten worse throughout the morning. Dow futures now down by close to 270 points. S&P futures down by close to 50, and the NASDAQ off by just about 230 points. Treasury yields are higher this morning. The 30-year right now is just below 5% at 4.97. You've got the 10-year at 4.28 and the 2-year at 3.65. And oil prices have picked up this morning too, the highest level we've seen since August 6th. Now up by about 2.7%. WTI is trading at $65.74 a barrel.
Meantime, a federal appeals court ruling on Friday that President Trump overstepped his presidential authority when he imposed sweeping tariffs back in April. Joining us right now is Neil Patel. He is the former U.S. Acting Solicitor General and the lead counsel representing the plaintiffs in the case. He has won the case. I'm curious what your reaction to winning was, how surprised you were, but more importantly, what you think happens next.
So we were not surprised. I looked at this and thought, normally it's very hard to challenge presidential action. There's a lot of deference from the courts to that historically, Andrew. But this one just went way beyond the constitutional line. Our founders really gave decisions over tariffs and taxes to the American Congress, not to the president through the stroke of his pen. So I was not surprised to see this overwhelming decision in our favor and against the Trump administration. As for what happens next, the administration has two choices. One, they can do what the court said they should do, which is go to Congress. If you really think the court said, Mr. President, these tariffs are so important to the economy, go get them approved by Congress. That's the American way. That's what we hope he does. The other option is, of course, he can try and take an appeal to the U.S. Supreme Court.
Okay, and I imagine you think, and I don't know what you think, but the likelihood is that he is going to go to the Supreme Court, given everything that he's said so far.
That's for them, not for us. If they go to the Supreme Court, we will be very happy to defend what the lower court did here.
And in terms of the sort of larger argument, this may come up in the Supreme Court, this idea of going to Congress. We've lived, maybe it's a political question, we're sort of in this unique moment where you have the president doing a lot of things through effectively executive order or using other kinds of emergency powers, if you will, and Congress has effectively let this happen, right? It's sort of said, go, do it, or at least we're not going to stop you from doing it. Is it possible that the Supreme Court could take that kind of position effectively, which is to say that if it's on Congress to try to stop them as opposed to push them to make the decision themselves?
I guess it's theoretically possible. It's constitutionally not permissible, Andrew, because what our Constitution says in Article 1, Section 8 is that Congress has to affirmatively act before the status quo is changed. And President Truman tried a version of this back when he seized the steel mills in 1950. And, this is in the midst of the Korean War, is a really big deal. And the government said, we need to seize the steel mills. There's labor strikes happening and the like. Otherwise, our warfighting capability will be reduced. And the administration defended its position by saying, look, Congress hasn't stopped us from this. Supreme Court said that's all poppycock. Basically, Congress has to authorize the rules in the first place. And that's the American way. And by the way, this is a Congress controlled by the same party as the presidency. He's able to get other legislation through. If he thinks this is so important, he should do that. He tried to do it when he was president the first time around. Congress said no. I think, again, it's a decision for Congress to make, not for the president by the stroke of his pen.
One of the other big questions is if, in fact, you do win, and this goes to the Supreme Court, does the money that's been collected in the form of tariffs get returned to the various countries and therefore the companies? How does this work?
Yeah, so it'd be so refund actions have been used in the past. They're certainly possible here. That's way down the road for now. I think the important point, Andrew, is that these tariffs have been ruled illegal by the nation's second highest court. And the question now is, will the administration abide by that ruling, or will they try and go to the Supreme Court?
It'd be impossible to figure it out. What do you mean return to the countries? We've always been told the countries don't pay any of the tariffs.
Well, I'm just suggesting you're going to have to.
When you give it to them, you'd never be able to figure that out, Neil. It's ours. I'm sorry, we're keeping it.
It's going to go right next to the Russian oligarchs' yachts.
Neil, let me ask you a different question, which is I think there's a lot of businesses out there that have been trying to figure out what to, sort of how to manage these tariffs. Some of whom have decided, you know what, I'm going to go all in. I'm going to try to manufacture back in the U.S. because I think that this is a long-term proposition. There's others that say, you know what, I'm playing chicken with this whole situation. I think, like you do, that it's illegal, and therefore I'm going to wait this out and see what happens. There are other things that the president could do, other ways that they could try to tariff folks, maybe not at these levels, and maybe not permanently. But how do you, you represent, and I know your firm works with businesses. What do you even tell them about this?
Yeah, I mean, I'm privileged here to represent a whole group of small businesses who are exactly in this situation, Andrew. They're sitting there saying, the president says these are so important. They're incredibly onerous tariffs. What in the world are the rules going forward? And we think it's really important that, these rules get clarified as fast as possible. That's why we've tried to litigate this case as quickly to get decision rules in place. I can't predict what the Supreme Court will do. That is their prerogative. I can say that the case against President Trump's tariffs is overwhelming, but there are more limited powers he does have. He has the power under Section 122 of the Trade Act to have a 15% temporary 150-day tariff. 15%, 150 days. What did he do here? He said the tariffs could be 50%, even 150%, and indefinite, which goes way beyond anything that Congress has given the president the power to do. So I unfortunately think this will be an open question until the administration decides to either go to Congress or go to the Supreme Court. And if they go to the Supreme Court, our hope is that they resolve this as quickly as possible.
And just finally, from a timing perspective, how quickly do you think that this gets, I don't know what to say, resolved, but that we know which approach they're going to take?
No, they no idea. They have time. The court gave them until October 14th. It's our hope that they move quickly. We're ready to go right away, either and make our case in the Supreme Court if the need be.
Okay, Neil, I want to thank you for joining us this morning. Really appreciate it and look forward to talking to you again very soon as this all continues to play out.
Thank you.
All right, coming up, check this out. CEO of McDonald's is going to be here on set to talk about this morning's announcement that it will lower the prices of popular menu items. Later, this guy, Liberty Chairman John Malone, a giant interview to talk about his new memoir. Can I just give you two, all of us, a compliment? Is that, next week is the 30th anniversary week for Squawk.
It is.
So, I was in Telluride. I saw 11 movies in 3 days. Okay, now most of them are about 2 to 2.5 hours long. After sitting there for 2.5 hours a couple of times, I thought I might need to. I didn't know what I needed, drink or something. I was going to go quick. We do a 3-hour show when we sit here every day.
We get to talk instead of listen to other people.
Is that what it is? No, it's much faster. It's much easier to. No, I'm speaking for everyone. It's much easier to watch this. Yeah, it's much easier to watch this 3-hour show than to watch a 2-hour movie.
I would agree with you.
You know what?
I mean, I couldn't believe how long by the end of it, I'm going, it's never going to end. It's never going to end.
Welcome back, everybody. McDonald's launching a new value menu with options including a $5 sausage McMuffin meal and an $8 Big Mac meal. And joining us right now to talk about it and much more is Chris Kopczynski. He is McDonald's CEO. And Chris, thank you for coming in this morning. This has been pretty widely telegraphed. You talked about on the conference call about how you really need to grab the value to bring customers back in. What happened? What was the evolution of this?
Yeah, well, extra value meals are back. It's, I think, a great day at McDonald's. And for us, we've been on sort of a value journey over the last year. We last year launched in the summer the $5 meal deal, which was a great success. Later, then we launched a buy one, add one for $1. All of that was under McValue. We also continue to have a lot of activity on our app. So if you're using the McDonald's app, there's great offers there. But the reality is that if you weren't using the app and you didn't buy McValue, where did you find value on the menu? And that was about 50% of the transactions were consumers who weren't using the app and weren't buying McValue. And so credit to our franchisees for recognizing we had a gap there where we needed to really come in with a strong message. And that's what we're doing here with this extra value meal. It's going to be all your McDonald's favorites and it's going to be predictable. So you're going to know every single day when you come in that you can get McDonald's extra value meals at a great deal.
It's something to try and coordinate with all the franchisees, though, because you're splitting the costs on this between marketing and who ends up getting. You're paying for some of the franchisees.
Yeah. You know, I'd say our franchisees actually were very much in favor of this. It didn't take as much as maybe what you're suggesting. When this went to vote for our franchisees, which is how it works in our system, this was as close to unanimous as we get in our system for people to get behind this because they recognize the extra value meal is one of those things that's kind of in the McDonald's DNA. I mean, when you drive into a McDonald's, you say, I want the number 1 or I want the number 4. And people have an expectation to see there to be a discount there. And so, you know, we had to provide, I'd say, some support, particularly around the marketing side because our calendar was already pretty full with other activities. But this wasn't something that required a lot of arm twisting with franchisees because they recognize extra value meals and the predictability that the customer expects when they come into our restaurants. It's something we've been doing for a long time. We got away from it with all the inflation during COVID, but we're back to it now.
And you're moving fast. The stock's right off at all-time high. And we just had Ray Washburn, and he's Red Lobster. He talked about Chili's and talked about how if it's you get $1 more at Chili's, I guess that's a higher, it's not a McDonald's, it's thought of as a casual dining or something. So if it's only $1 difference, you might go to Chili's. So you recognize that and move quickly, right?
Yeah, and part of what we also saw was that, particularly with middle and lower income consumers, they're feeling under a lot of pressure right now. I think there's a lot of commentary about what's the state of the economy, how's it doing, and what we see is it's really kind of a two-tier economy. If you're upper income, earning over $100,000, things are good. Stock markets are near all-time highs. You're feeling, quite confident about things. You're seeing international travel. All those barometers of upper income consumers are doing quite well. What we see with middle and lower income consumers is actually a different story. It's that consumers under a lot of pressure in our industry. Traffic for lower income consumers is down double digits. And it's because people are either choosing to skip a meal, so we're seeing breakfast. People are actually skipping breakfast, or they're choosing to just eat at home. And so for our business, which has a significant group of consumers which are in that middle and lower income, we needed to step in with something like what we're doing here.
Do you find yourself, tiering different products though? Meaning saying to yourself, okay, there's going to be a lower income consumer, and we're gonna have this product for them. But then we have a luxury consumer that's walking in, and we're going to charge them, a premium price for some kind of premium product.
Yeah, we call it value ladders. So there would be something that would be an entry price point for someone who's looking for something that maybe they only have a few dollars in their pocket. So what can I buy for a few dollars in my pocket? And then we try to offer more premium items as well. For somebody who's maybe able to spend more money.
But because it's a two-tier economy, do you not get the benefit of wealthier people trading down that you might in a generalized economy or economic downturn?
We don't see as much, again, because that wealthier consumer right now isn't feeling under a lot of pressure. It's just, this isn't like what we saw in the Great Recession, where that
Everybody
consumer,
trades down.
everybody was trading down. Right now, again, if you're upper income, you're feeling pretty good about things, and so we're not seeing as pronounced a trade down effect this time around.
And the chickens, it's back. The snack wraps are back.
Snack wraps
Permanent.
back
Permanent.
permanently, $2.99, spicy ranch. I would.
Right.
Have you
I
tried
told
it?
Yesterday, but the women in my family want those. And they said, did you ask him if he fired the person that got rid of the snack wraps? And you said we probably did.
Probably did. Yeah.
But it was a while ago. I want to just ask one thing about MAGA versus Maha, because I would have thought that. I mean, there was a stigma, an anti-McDonald's sort of a stigma among, I don't know what you would call it, for about lack of a better term, woke people. So I see that reversing a little bit, but at the same time, I see Robert F. Kennedy Jr. like looking at the president when he's eating a Big Mac and like rolling his eyes. It's almost like two competing narratives coming from the same administration. I've never wavered on McDonald's, as you know. Anything in moderation.
I think for us, part of this is a lot of the things that have fallen sort of under this MAHA umbrella are all about artificials. They're about artificial preservatives, artificial flavors, artificial colors. Because the food that we're preparing in our kitchen is fresh, we actually don't use artificial colors, flavors, preservatives. Where you see it will be in things that some of our soft drinks that we serve will have it. Some of the toppings on a McFlurry, if you think about
Super Size Me. That people think about that movie.
Yeah,
It makes
so that
people
was
fat.
certainly a long time ago we had that as well.
Right.
But I think this is where on our menu we try to just make sure people have choice. So if you want to have a lower calorie option, if you want to have a more indulgent option, how do we just make sure
We don't sell yogurt and apple slices anymore.
They do sell yogurt.
Yes, they do.
Yeah, we do.
Well, that's where I was going to go, which is you keep talking about the health of the consumer. I want to know about the health of the franchisees themselves.
Yeah.
And sort of regionally, where they're super healthy, where maybe they're less healthy.
Yeah.
How you think about that?
Yeah. There's no doubt that in the last, call it 4 or 5 years, the franchisees have been under a lot of cost pressure. They've been under cost pressure because food and packaging costs are up north of 40%. And you also have seen labor costs go up pretty significantly across the country. There's close to 30 states that have had significant increases in the state minimum wage. California notoriously introduced the $20 minimum wage just for restaurants that are 60 restaurants or more. So there's been a lot of cost pressure that's been on the franchisees, which in part has led to some of the price increases that you're seeing as well. I think through all of it, our franchisees are still doing well. We're certainly doing better than our competitors. If you think about where we were all-time cash flows, we're probably off maybe 10% from where our franchisees had all-time cash flows. That said, there are definitely pockets of the market, like in California, where there is much more pressure on that. And I think this is where, with our franchisees, that's part of why we wanted to step in and co-invest with them to do this extra value meal program, to show that we're all in it together, and that the cost pressures that they have, we're also not asking them to do everything on pricing. We're willing to step in this particular case and help them as well.
I think one of your predecessors, I just remember that instead of doing a lot of innovation, it was going to be fast, it was going to be fresh, it was going to be consistent from franchisee to franchisee. And I go to a lot of different ones if you travel.
Yeah.
I haven't had a bad one, I don't think, recently. How does the corporate parent make sure that everyone's on the same page, the franchisees?
It all starts with our strategy, and one of our strategy called Accelerating the Arches, and one of the things that we've said with the strategy is commit to the core menu. Our menu, about 60% of the menu is what we call core menu, which would be the Big Mac, the Quarter Pounder. If you have the Golden Arches outside the restaurant, you have to be flying. You have to be having.
Do you have a bottom 10% of quality? Do you know franchisees that are just bad? Trash doesn't get emptied. It takes forever
the thing
to
I
drive
love about
through.
this business is we have data on everything, and we have it down to the minute. So we are able to slice and dice restaurant performance.
What happens to a franchisees that's in that bottom, let's say 2 percentile or 5
Yeah, well, it starts with we try to improve them, and so sometimes a franchisee might not even know that they're in the bottom 10%. And then when we identify they're in the bottom 10%, then we go, why are you in the bottom 10%? And we'll work with them to develop a plan to try to now improve the performance of the restaurant. Over time, if that doesn't happen, then we have a different conversation. But our starting point is everybody that's in our system is trying to do a good job. So if they're not doing a good job, are we doing the right coaching to help a restaurant improve?
How big of an issue is finding labor these days, particularly when you talk about some of these higher wages that are out there?
Yeah.
I've seen a lot of automation that's gone into the McDonald's.
Yeah.
Where you order yourselves before you walk in. The app, you're trying to get as many people as possible to order on the app. Is that all part of because of how difficult it is to find?
It's gotten a lot better around labor. Right now, we're not hearing. I was out in our restaurants a couple of weeks ago, traveling around Kentucky and Georgia, and when I was talking to the franchisees, they all feel pretty good right now about being able to find labor. I think some of the things that you're talking about around kiosks, using your phone instead of going to the front counter, are driven more by the customer. The customer, in many cases, wants to be able to order off the phone. They want to just go to the kiosks. I know my own kids, they don't like to talk to anybody. They like to do everything themselves. So the changes that you're talking about are driven really more by the customer. But certainly there's opportunities for us to do automation. It's something we're always looking at with our franchisees. And I would imagine over time, particularly as AI gets developed, you'll probably see some opportunities for there to be more automation. But it's about making the restaurant easier to operate for people.
So you have areas like California where they've raised minimum wage to $20. You now have a new proposal from the administration, or a law that's now been put into place, that will allow no taxes on tips. What does that mean for your employees who don't get the benefit of that?
Yeah. Well, anything that is done to help restaurant workers, I'm in favor of. So I support no tax on tips. The issue with no tax on tips is it only benefited those restaurants that have tips. And so, as you're rightly pointing out, we don't do tipping in McDonald's, and so we don't get the benefit of essentially that tax relief there. Part of the other thing that I don't think most people realize is if you're a tipped restaurant, the minimum wage requirement there is $2.13 an hour.
$2.13.
$2.13 an hour. That hasn't been changed since 1991. As opposed to the federal minimum wage at $7.25, that was most recently changed in 2009. So right now there's an uneven playing field between if you are a restaurant that allows tips or has tips as part of your equation, you're essentially getting the customer to pay for your labor, and you're getting an extra benefit from no tips, no taxes on tips. So part of what I think we need to do in this minimum wage conversation is let's start with everybody should be paying the same minimum wage,
and whether that's that have tipped employees,
tipped and non-tipped, and we already know there's about 8 states that have no difference between tipped and non-tipped, and we know that in those states poverty levels decrease. We know that turnover levels go down. We know that actually it doesn't lead to any job loss. So there's already been a model that shows that no tax on, or that the tipped wages can be at the same as the federal minimum wage. We just need to do that, I think, across all 50 states. And we've said repeatedly, we're open to conversations on raising the federal minimum wage.
Have you spoken with anyone in the administration about that?
We're in constant dialogue with them on various topics. This is one of those topics that we're in dialogue with them. And I'd say we have a good back and forth with this administration.
How do you grow? Does it have to be global expansion? Would you add things to the menu at this point, or just make everything better and fresher?
Yeah.
How are you going to grow?
All the above.
What would you add at this point? I don't think you should add.
Well, there's a lot of chicken. So chicken is 2 times the size of beef. Chicken's growing faster than beef. Chicken right now, because of what's happened with beef prices, is much better value.
Can you replicate a Chick-fil-A sandwich?
Well, we've got a great tasting McCrispy.
I know, but they got something. I don't know what it is. And then you hit that crazy, the spicy one.
Give McCrispy a chance. But we're pretty proud of our McCrispy sandwich. But we're adding chicken, as you noted. We've brought back the snack wrap. There's other things that we've done in other markets where we have wings in restaurants, where we have bone-in chicken. So there's plenty of expansion we can do in chicken. We're also doing some tests right now in 500 restaurants around beverages, looking at bringing in energy drinks, looking at bringing in cold brew, other things that we can do in beverages.
Beer,
so there's
coffee.
What's that?
Cold brew beer or coffee?
Cold brew coffee. Cold brew coffee.
Question, he talked global, and you're in all of these markets all over the world.
Yeah.
And there's a question about how the rest of the world views us.
Yeah.
McDonald's is as iconic an American brand as anything.
Mm-hmm.
How do they view us?
Yeah.
And how do you think about that?
Yeah. We've been tracking that since the beginning of, actually the end of last year. So we've done kind of 4 global surveys of consumers, and we've asked them, how do you feel about America, the country? How do you feel about American brands? And then how do you feel about McDonald's? And what we have seen is that in other markets, maybe the aura around America has dimmed a little bit. And we are seeing in those surveys as well that consumers are making choices to not maybe frequent American brands as much. That said, when we ask them, has that affected your visit to McDonald's? They say no, it hasn't affected. And so, when we look at that, I think part of this is we've been in so many of those markets for a long period of time, and there are businesses also locally owned. We're typically the largest employer in these markets. It's a local franchisees, the supply chain. So I think we're maybe a little bit more.
Have you shifted how you market the brand in those markets? Meaning, there was a time where you marketed McDonald's as one of the great American brands, and are you shifting to making it feel like more of a local brand or more around the local community? And what does that say though about the American brand?
I think we know that food is inherently a very local thing. People are embracing local cuisines. They want to support their local business. We're a business all about being in the community. We are seeing that there's a lot of opportunity and a lot of receptiveness for us to push more into that. I think, I don't know if I would say we leaned into our Americanness over the years. I think we're a beneficiary of that. But we're certainly from a marketing standpoint right now focusing much more on what we're doing within the communities to emphasize our locality.
If you feel that you have to lean away from being American?
Orange Man bad?
I'm sorry?
Nothing.
Yeah, I don't have an opinion one way or the other on it. I think for a period of time, there were a lot of brands around in the consumer space that were American brands that went into other markets. I think it's natural that at some point those brands move from being seen as an American export to being seen as just something that is local or indigenous to that country. And so for me, it's a natural evolution. I don't know if I would have, a view that this is somehow a negative event. I think any brand, when you launch it into a country, you would hope that over time it would be accepted locally.
Chris, what do you do about making up the Russian restaurants that you sold out? I think it was 850 restaurants. How do you get back to those levels?
Yeah, well, that was a significant event for us. We ended up taking about $1.4 billion write-off. We had 60,000 plus employees in Russia. I think when you exit a market that size, you don't just make that up overnight. And so for us, it's really about let's focus on the 115 other countries that we're in. I would say China for us continues to be a big growth market. It's our second largest market. We're building 1,000 restaurants a year in China. We still see good growth in China. But yeah, when you leave a market like Russia, which for us was our third market that we went into outside of the U.S., when you exit a market like that, it is a significant hit to the business.
And your beef supply has to be just pristine, no matter what. We just heard something else we heard from Ray was something called a screwworm, which I haven't. Have you ever heard of that?
I have not.
I've never heard of it either. But obviously, beef coming into this country is highly inspected.
Yeah, we have a great supply chain team, and as you would imagine, we put a big focus on the quality of our food supply, the safety of our food supply. So I feel pretty good about what we're doing at McDonald's.
Chris, we want to thank you for coming in with us to talk about this news and everything else.
Yeah, thank you guys.
We appreciate it.
All right, appreciate it.
Chris
Thank you, that was
Kempczinski,
great.
CEO of McDonald's.
Coming up, another big guest and a lot of big stories. We're going to tell you about those after the opening bell. And then the legend, Liberty Chairman John Malone, is going to join us right here, first on CNBC, on the release of his new memoir, Born to be Wired. We're going to have John Malone after this.
Swedish fintech firm Klarna is looking to raise nearly $1.3 billion in its long-awaited U.S. IPO. And according to this filing that was out this morning, Klarna plans to offer more than 34 million ordinary shares, priced between 35 and 37 each. The company's going to list its shares on the New York Stock Exchange under the symbol KLAR.
Got some other stories in the headlines to tell you about this morning. Activist investor Elliott Management has now built a roughly $4 billion stake in PepsiCo. That stake would make Elliott one of PepsiCo's top 5 active investors. Be one of Elliott's largest stakes ever. The hedge fund says companies should evaluate potential refranchising of beverages and review costs. You look at that stock on the move this morning. Meantime, President Trump saying India has offered to lower tariffs on U.S. goods to 0. The president saying in a post on Truth Social that the move is coming too late and calling the trade relationship one-sided. That message coming after the Indian Prime Minister visited China to attend a summit. The president has called out India for its imports of Russian energy. He imposed tariffs of up to 50% on India last month. And the Powerball jackpot has climbed to $1.3 billion. This is after no winner matched all 6 numbers during the Labor Day draw. It's the 5th largest jackpot in the game's history. The next drawing is scheduled for tomorrow night. Joe is going to reprimand everybody who goes and gets a ticket. I will go get a ticket. And even if I win, I will still come in every morning afterwards.
Tax on the stupid.
If I win.
Go for it.
I just said.
And I think you don't even get the 1.3 billion. What do you finally get after taxes and
just 600 million. Just 600
No, I don't think
million.
you get that. I don't think you get that.
Oh, if you take it as a one-time lump sum, you're probably down to 300 to 400 million. But
And I've warned you so many
beggars can't be
times.
choosers.
If you are ready,
I'm ready to do it.
really, a 1 out of a billion
Yes,
chance.
I know.
Do you know what kind of diseases you're opening yourself up to? You're going to walk out and get hit by a Sputnik.
I know.
Something that comes off a satellite will kill you before you
A
win
man
this
can
lottery.
dream. A boy can dream.
You will die at a vending machine trying to get some Fritos out
If I
before
win,
this
you'll never see
happens.
me again.
The chances of everything in the world, all these bad things would happen if you believe in that type of probability. Don't do it. Do not.
And when you're riding on my plane, you'll thank me later. Still to come, stocks to watch ahead of the open on Wall Street, plus Liberty Media Chairman John Malone on the changing media landscape, lessons on deal making and investing in live sports. You'll be in steerage, that is. The interview coming up next.
Flash Plus.
Welcome back to Squawk. We are joined now by a very, very, very special guest, a legend in the business, media titan, chairman of Liberty Media, and the man behind some of the biggest deals in media of our time, John Malone, author of Born to be Wired, Lessons from a Lifetime Transforming Television, Wiring America for the Internet, and Growing Formula One, Discovery, Sirius XM, and the Atlanta Braves. It is out today, and we want to welcome John for joining us today. John, it's great to see you. Congratulations on the book. It's a fabulous, fabulous book, and there's so many stories in it about so many unique characters that make headlines that we talk about virtually every day. I want to talk about the book, and then I want to get into what's going on in the media landscape that we know today. But just take me back to the beginning of even deciding to write this book, why you did.
Well, there was a previous book called Cable Cowboy, which really was a misnomer because it was really should have been written about my mentor, Bob Magnus. But anyway, it stuck to me. The writer of that book approached me and said, you should do a sequel because it's been 25 years and you're not dead yet. And so he was going to write a sequel, and we started working on it together, and it became increasingly my autobiography as opposed to his view of me. And that's why it got written. I probably, if I had known how much work it was going to be, I probably wouldn't have done it.
It felt to me like this was an emotional book because you talk about the various relationships and how important those relationships have been in your life and frankly to the business. You go through a great sequence, which I'd love to get your thoughts on today, about Ted Turner and your relationship with him, and frankly your hope that you had wished you could have bought Turner at the time.
Yeah, long history with Ted. He came to us with the idea of his superstation. It took some convincing, but we ultimately launched it, carried it across our cable footprint. When Ted got in a bit of trouble trying to buy MGM, we had to get together, the industry got together. I was proud to lead the effort, and we raised, I don't know, $600 million, which was real money back then, to get him out of the clutches of Kirk Kerkorian. And Ted was on our board for many years at TCI. So we had a very long history, and we were pretty good personal friends too. I traveled with Ted quite a bit. Goodwill games in Russia, for instance. Great stories. Ted was and continues to be quite a character. I've become the godfather of his Atlanta Braves baseball team, and trying to nurture it along. I know he's very proud of the team. So we have a lot of things in common. We have ranches that are back to back in New Mexico. I went quail hunting with he and Jane a number of times. All kinds of things. Great stories, great history. He's a hell of a character and a very sound businessman.
Well, let me ask you about another businessman who I think you respect deeply, and there's a fascinating sequence in the book about it. And we had actually spoken to this gentleman earlier in the year because he had his own book out, which is Barry Diller. And you two got in maybe a scuffle is maybe too polite a term, because you went to court and it almost broke the relationship. And then you wrote him a letter. Take us back to that moment, because it was an emotional moment. I remember when we had Barry on the show talking about what had happened.
Well, what happened was my CEO at the time at Liberty Media, Greg Maffei, had a rocky history with Barry. And when Barry decided to break up IAC, collection of businesses, and distribute some of the businesses not reflecting our control structure that we had in IAC, that had been in place for a number of years, we decided to ask the court how to interpret my original agreement with Barry. It was a very unusual agreement. Barry was such an incredible talent. The only way I could get him to work with us, I don't think for us, work with us, was to give him a proxy on my control of the company we were going to create together. And I did that. That was, I don't know, 35 years ago, something like that. And he did a fabulous job of building a business, starting out in home shopping, mutating into content, and then once again mutating into internet services. Really pretty unique performance. But as he was about to split the company into multiple pieces, there was a question, a legitimate legal question, about what the intent of the original agreement was. And I wanted to go to court and ask a judge to interpret that agreement for us. Unfortunately, the legal situation got out of control, and it became almost a Ted Kozlowski type of set of disputes, which I didn't want any part of. And I was really embarrassed by how far out of control our litigation had gotten. And I wanted to apologize to Barry personally for not having paid close enough attention and kept it on the rails. So that was the genesis of that.
Hey, John, as someone that people follow so closely, and obviously a legendary in media and in all different aspects of it, another kerfuffle was right before Discovery was going to merge with Warner Media, and I think you made some comments about, I think to our own David Faber here, about CNN hiring some actual journalists. Now since then, I know that was quite a moment, and that did result in some changes at CNN, and then I don't know, and some even more changes after that. And then we've seen what's happened with CBS, and the Stephen Colbert and pressure from the Trump administration. I've always said that almost any mainstream media entity you could have almost made the same comments about. John, do you think CNN has changed to the point where you are seeing actual journalism now? Do you see it across mainstream media anywhere?
No, and in fact, it's very difficult. I get it. I was around when you guys were created. Zaslav and I basically created CNBC.
Yes.
I was around, I was partners with Rupert when they created Fox News. We used to own McNeil Lehrer as a public service. We supported that effort on public broadcasting for many years. So I've been in and around the news delivery game for a long while. And I've always struggled with the question of news. Just give me the news, the factual news, and how do you separate news from the impossible bias that the journalist has? They always come to it with preconceived attitudes. When Rupert pitched Fox News, it was going to be that we're going to have a true news division. There will be just the news. And I guess you would say that's Brett Baer today. But then we're going to have essentially entertainment programming focused on news and current events and culture and so on. And that was his formula. And CNN decided to stay and try and be just news, as opposed to news and comedy and entertainment. My view was that that it was okay for Fox to do what they did as long as you labeled opinion as opinion, like the newspapers did. You have journalism, you have the facts, and then you have editorial opinions, and then you may have guest editorials. And you can make it all interesting and entertaining, but what you're calling factual news, it would be nice to be just factual news. Now, I know how difficult that is. CNN has great journalists. They always have had great journalists. They have a large organization that does the best job of covering breaking news worldwide. That clearly is a big strength for them. The reality is that journalism schools turn out people who tend to be reformers. They tend to want to fix the world from the journalistic perspective. So they tend to be quote unquote progressives personally. And it's impossible to separate that sort of personal opinion structure from the way they cover news, the kind of adjectives that come to their mind when they are reporting a story. Now, I never had much to do with CNN. I was chair of the governance committee at Warner. I stepped off that board this spring and became executive chairman emeritus, but so that they could keep me tied up and I could continue to be involved, but not be a voting member of the board. Even during the 3 years when I was on the board of the combined company, I had zero to do with the governance of CNN. That was David and his efforts to bring in new leadership. As you guys well know, the linear television business, of which news is part, is suffering from the rapid decline of viewership of the big cable bundle. And that's putting a lot of pressure on these organizations, financial pressure. And they're going to have to figure out where it's appropriate to morph to be more relevant in a streaming world.
Right. Hey, John, so, I don't think we've had a chance to talk since the announcement of the breakup between Warner and Discovery, and what your thoughts are about it, what you think the prospects are for both businesses. Do they remain independent? Do they ultimately get sold? Does a business like CNN get sold? I don't know if they can, given the debt load. How do you think about the breakup? And does it suggest at all that the original plan to merge them made sense or didn't?
Well, I guess the only thing personally that didn't make sense is I should have bailed out of my Discovery shares before we put the companies together. The reality is that all these linear businesses were going to come under enormous pressure as streaming became the favorable way for consumers to consume programming. So Discovery, had we kept it isolated, would have faced the same headwinds and probably ended up roughly in the same place that the combined company is. That is, trying to deal with a streaming world while still being heavily encumbered by contractual relationships in the old linear world. And so, for instance, when AT&T tried to do CNN Plus, it was a streaming service that did not include CNN, which they couldn't include for contractual reasons. So, we're in the midst, I think, of watching a transition in consumer consumption. Right now, you guys, as well as anybody, that you are lashed your wagon to a linear business that's losing about 8% of its customers a year. That is a pretty heavy headwind, and that's been going on now for probably 4 or 5 years. And so eventually, you're going to have to transition to where you're a random access service. Now, the good news for you guys and for news generally is that you have a stream of live information and content that the public's always going to be interested in.
God bless you, John. What do you make of the prospects for, that Comcast is going to separate from these assets in Versant? I know that's something you talked to Brian Roberts about, you've spoken about before. What do you make of the prospects for Comcast? Do you think it ever gets a chance to merge with a Charter, which I imagine something you'd like to see? And where do you think about a Paramount and all of this when you look at the chess pieces on the board?
Well, as you know, I mean, unfortunately or fortunately, I get myself in the middle of all these discussions about what fits with what and how is it going to work and how can Brian Roberts retain meaningful control of an empire that his father ceded to him. It's very important to him. Meet the regulatory hurdles of consolidation. For one thing, the industry, the old media industry, both transport and content, needs to continue to consolidate to get scale, to be efficient. There's too many streamers for sure, and obviously broadcasting is morphing into sports distribution. At least for now, keeping it alive, if not highly profitable. So news and sports live, which really, frankly, just requires one channel, and instead, with streaming, is consuming millions of channels, which is a whole different story. But, there's this reallocation, let's say. At the moment, big tech has the upper hand. Distribution for big tech is free on the internet thanks to network neutrality, a regulatory decision that was put in by the Obama administration and really did cripple the traditional cable media alignment.
Are you hoping for that to be overturned at some point, John?
Well, I would love for regulators to take a look at live streaming. It's absurd to me that you tie up 40, 50, 60 million channels of internet transport to transport one football game, which can easily be transported on one channel. So, to me, that's where the regulation runs afoul of common sense and puts enormous capital pressure on the internet in terms of capacity, which incidentally then has to be paid for by the consumer. And since the FCC's original approach was everybody has to pay the same, so light users of the internet don't get a break relative to heavy users, then everybody is subsidizing big tech as they drive sports into streaming and primarily benefit from advertising sales, which generate 2 to 3 times the revenue that the linear advertising represented. So this is really financially driven by advertising potential and being taken advantage of by big tech primarily, both to capture scale in streaming, but also to drive an immense move in advertising revenue.
So John, we only got 1 more minute left, but if you could buy or sell the big media companies today, which ones would you buy? Which ones would you sell?
Oh boy, that's a really tough one. I think everything's relative. The market is pretty efficient in pricing these businesses. So I don't know that there's a lot of difference amongst them. The market has figured these out pretty well, and it's going to be a function of performance from here. Are we guessing right that a Warner, a studio streaming library run by David Zaslav is something the market is really going to value highly?
Right.
Okay. If they do, will they value it highly enough to raise enough equity capital to make the entire collection of Discovery Warner
that's the big question.
economically viable?
John, unfortunately, we could talk forever. They're playing us out. We got to turn it over to our friends on Squawk on the Street in just a moment. The book is called Born to be Wired. It's a fabulous book, John. Congratulations on it. We look forward to hopefully talking to you again very, very soon.
All right, that does it for us today. We will see you right back.
.com.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer here at Post 9 of the New York Stock Exchange. David Faber has the morning off. Welcome to September and its treacherous seasonality getting reflected in pre-market as long-term yields soar both in Europe and here at home. 30-year 4.99 as markets react to Friday's appellate court ruling on tariffs. Our roadmap begins with a setup for September, historically a tough month for stocks. Most of the president's tariffs ruled illegal by that appeals court that deals a major blow to his trade policy. And a lot of news in the food and beverage sector today involving Kraft, Pepsi, and Constellation Brands. Let's begin, though, with the market as we kick off a new month of trading. Jim, we know it's the worst month of the year, the back half of the worst 2 weeks of the year. But does this have a lot to do with Friday's court decision?
Well, I think the court decision makes people feel that anything that's up in the air, maybe there are different countries that horse trade. We want to get past tariffs. We were hoping that we could be past tariffs and just focus on the beautiful bill. We can, and as long as we can, and as long as there's something like the president revokes Taiwan Semi. Well, Taiwan Semi is the building block for NVIDIA. The just insecurity that people have when you speak about having to go to a wedding for Ben Stotos, my research director. Well, the insecurity people have is just insane. I mean, everyone wants to get out. It's too expensive. Who knows what's going to happen? I want people to stay the course, but you have to recognize that you're going to take a hit here. You're just going to.
You think just the seasonality alone?
Yeah.
Although you did suggest this morning that the administration might be able to surpass some historical analogs.
Yeah, well, look, I don't want to sell. One of the things that gets you in trouble is you come out and you say, listen, I actually believe the president's plan for industry. Because then people say, "Oh, you love the president." I said, "No." Half our viewers are Republican. I'm just saying I believe that it could work, and not to panic because of some federal court, because the actual Supreme Court is 5-3. I mean, so people voted on party lines. Now maybe Justice Roberts throws us a curveball, but I think that they go for it.
If they take the decision.
Yes,
no
if they take the
guarantees.
decision. And then you get everyone's excited about the possibility that there will be something that I shouldn't say agitated about China and Russia, the axis of evil, as if we like India, China, Russia. I mean, this has been going on for a while, and then the president comes out today and says, "Well, India is begging for zero." And I just say the lack of clarity and the fact that the calendar says sell is going to drive things down. And then you add on the fact that the journal points out that it's more expensive than ever. I say, whoa, wait a second. We have tech up too much. We know that NVIDIA is weaker. We know that NVIDIA is the bellwether. It's now down a lot from where it reported. I'm just saying, don't panic. Don't panic. This too shall pass, but you're going to have to lose some money.
Right. So a 5%, maybe.
I think that's
110 wouldn't surprise you.
No, I mean, for our club, and I was working with Jeff Marks today. We don't want to buy anything today. It's too early. It's too early in September. Let things rain, come down. Plus, we have an employment number.
Yeah.
And then you have another thing with the president. And those things drive the market down. Interest rates going up like this, not good. There's not a lot to say that's good right now. But we all knew it. So, I mean, at what point is it done? Now, I'm going to give you an example of Constellation Brands, STC. There are a lot of people who thought, how much more negative can there be? Beer's bad, wine and spirits are bad, the Hispanic numbers are bad, and then it comes out, and it's horrendous. So, I mean, just when you think that things can't get worse.
Right.
Now, I do have Signet on tonight, and Signet reported their numbers.
Yes.
Let's see how long that lasts. And, of course, we have to talk about, you're so right about package foods, going back and forth with Abrams Rivera is the guy who's going to be in charge of I think the faster growing grocery business of Kraft Heinz. And look, maybe things get better, but it's not a good hand. The good hand is the PepsiCo hand.
Yes.
That Elliott's going after, and that I think we have to spend a lot of time on, because I think that Elliott wants to bring out value. Look, I don't think you remove Raymond. I think you see what Raymond wants to do. Raymond Laporte, who has tried mightily in an atmosphere where the Gen Zers don't want to gain weight, and GOP makes it so you can eat just one.
Yeah, we talked with Celsius on Friday about upping that investment.
But I think John Fieldly, whom I enjoy, I think he got the better of the deal. He got Rockstar. I mean, what is that? They gave away Rockstar. And Rockstar, they had an impairment? No. But look, obviously, people are excited about new blood in there. But I spent a lot of time analyzing the Honeywell deal, where Vimal Kapoor worked closely with Elliott, and we've got 3 great companies coming up. So I say, hold on to PepsiCo. You ain't seen nothing yet.
Jim mentions KHC, and of course, we do now have plans to split the 2 independent publicly traded companies in an effort to revive growth. As Jim said, one brand will include Heinz, Philadelphia Kraft Mac and Cheese, Philly Cream Cheese, along with sauces and seasonings. The other will feature grocery staples like Oscar Mayer, Kraft Singles, and Lunchables. The decision to split comes after Buffett and Brazilian private equity firm 3G Capital backed the merger back in 2015, and since then the stock has lost more than 2/3 of its value. I wonder, where do you think the merger symmetries went awry, Jim? Why didn't that get wrong?
First, I'm asking Carlos who gets the cheese whiz, because I'll be in Philadelphia on Thursday, and I'm probably going to go to Chino's.
Whiz.
Okay, I think that they were. There was a time when you could buy these companies and cut them to the bone and be able to produce great numbers. There was another time where you could reinvigorate. Oscar Mayer didn't seem to have anything going. Heinz, they actually did a lot with, but in the end they got caught up with the curse of consumer packaged goods and where they were in the grocery store. If you stroll the grocery store, what you have to do, you see the Kraft and you see the Jell-O and the Oscar Mayers and they're all in the middle, with the exception of Lunchables, which is at the end cap. I don't see anything here, and look, we saw the same thing with the food part of Smucker, which is it's Hormel. Middle of the store.
Yeah.
People don't go to the middle of the store anymore because it's canned and it's or like even Conagra, they thought that refrigerated, that the younger people would want that. They don't want it either. They want clean and pure. And there was a great article. I think it was. I feel badly. I don't know if it's time to drum. Sorry about that. But a family that decided to go only natural. And their view was, if we haven't heard of it or if it sounds like a chemical, let's not eat it. Well, I mean, like, you know, this thing sounds like something that should be covered by the chemical analysts.
You think it predates sort of the policy evolution under Kennedy?
Yeah, I don't know. I feel badly about these guys are really good, okay? I think their hand is bad. The guys from PepsiCo have a great hand. They could really augment that hand. I think they work with Elliott. Some people want to work with Elliott. Some people don't. I think it is worthwhile because they read the actual deck is filled with stuff that says that's a bit of an indictment, because there's a lot of things that they at PepsiCo in the last few years, the price to earnings multiple has shrunk dramatically because the growth. I mean, what Pepsi's strategy, if I had to outline what PepsiCo's strategy is, it would be raise price, make smaller bag. In America, you know, this is the guy. I had Scott Boat right on last week.
Yeah.
Chipotle. You know, they had to raise price, but they made it larger. Now, it still hurts because it's $28 for a chicken burrito when you put in DoorDash. So that's on the expensive side. But PepsiCo, at least, with Chipotle, you got more. They made the size bigger because they were criticized. They're just, you know, my daughter's in the potato chip business, and she's got 3 ingredients, it's natural, and all these other things. That is not Frito-Lay. Right. Frito-Lay is a traditional brand that has a lot of, I think that has way too many chemicals, and that frankly is very expensive.
Although, Jim, eating well, as we all know, is expensive. Eating healthy is expensive. The Journal piece this morning, middle class vibe has shifted from secure to squeezed. And this kind of got reflected in McDonald's comments on our this morning about the lower income cohort. But the graphic is a tiny barbecue with a tiny bit of ground beef, which we know is at all-time highs in terms of cost.
Right. Well, you know, Chris Kimchinsky, I thought he did a good job, McDonald's. Look, I've always said that the secret, and it has been ever since Richard Clancy was the CFO, he's now retired, of Costco, is that's like the TVA. Now, TVA, some people feel is the yardstick, but meaning that if someone raises price too much, like if you're Tito's, and your big customers is Costco, and you raise your price, well, suddenly there's Kirkland vodka, and it tastes it taste tests every bit as good. And anyone who does not play ball with Costco, they offer you a choice: lower your price, or we're going to come after you. And their beef prices are the lowest. Their chicken prices, everyone, they got tired of being hurting chicken, so they decided to become a chicken farmer. So I think that Costco, if I were to be in front of the Federal Reserve, I said, listen, you got to go twofold. You got to look at Costco and Walmart. Now Walmart has passed on. Unfortunately, they've had to pass on some tariffs, but Costco is. I don't think Costco's all that much more expensive than it used to be. When I do, though, that is a little bit anecdotal.
Yeah.
But I follow Costco really closely, and they don't let people raise price the way that.
No, well, certainly the hot dog it's been a legendary battle to keep that at $1.50. There's a look at the Journal piece. As for McDonald's, we mentioned Chris Kempczinski on Squawk today. We're going to talk about the difference between Americans with assets and higher incomes and those without. Take a listen.
Woo! If you're upper income, earning over $100,000, things are good. Stock markets are near all-time highs. You're feeling, quite confident about things. You're seeing international travel. All those barometers of upper income consumers are doing quite well. What we see with middle and lower income consumers is actually a different story. It's that consumers under a lot of pressure. In our industry, traffic for lower income consumers is down double digits. And it's because people are either choosing to skip a meal, so we're seeing breakfast. People are actually skipping breakfast, or they're choosing to just eat at home.
We've always talked about McDonald's breakfast day part as either a function of whether or not you have a job to go to in the morning, or, and as Chris points out, maybe you just don't have the extra dollars.
What do you complain to them? I complain to them for the.
The problem is, who is that guy?
You're right. It's Tuesday.
I went to McDonald's last night. I ordered 2 regular cheeseburgers and fries. It cost me just under $10. Who can afford that kind of shit? And it just didn't happen under Trump. I mean, so I ate there once a year, and I haven't ate there in 2 years. I ate there last night because I was coming out of the airport and I was hungry. She says, it'd be cheaper if you buy the bundle the meal. And I said, I don't drink soda. The Biden inflation killed us all. Market's down pretty good. Well, I'm back. Glad to be back. This disgusting town. Woo! Look up Melise. Let's do it. Is it a dirty word? Is it like punta? Malaise. Melise. Malaise is a general feeling of discomfort, weakness, or illness. It is a non-specific symptom that can accompany various underlying conditions. Okay. Is that good or bad? I'll have to get the market back in shape. Well, a lot of it's just rhetoric. They're getting what they asked for. So it didn't hold my support. What the support I had last week, and we hit it double bottom today, and it failed. So that's going to become our new resistance, 640.39. I'm feeling good. I'm feeling great. Woo! Turn on the air conditioner, take off my shoes, go warm up my water for my tea, figure out what the market's missing here. Gotta figure out how to download my videos. We need to restart your computer. Why? Please restart to apply changes to your system. Advast, my antivirus. Remind me later. Watch today I get a virus. Remind me tomorrow. And I'll do it. And I'll restart it after hours. Remind me tomorrow. Did you miss my singing? That's probably what the market misses. Get a different chart here. Listen. I need a small one. There we go. $20-day 1 hour. Let's see if we got a 20-day low. Yes, double bottom on a 20-day low. Talk about meat bears. Talk about pop music. Talk about. We got a double bottom. You could call it a triple bottom if you want. Yeah. Watching the video, it opened. I need to start planning for my other vacation. Cool, let's get. It was last month. August. August. Huh. There it is. Paperwork done. Whoops. Okay. Well, I don't want to rush into things, but I already see one good setup. Let's say we got to break the 200 on these tech stocks. NVIDIA, AMD might hit it, pull back, and then retest. We got a new low on Apple. Now it could be overbought. Well, where are you tonight? Why did you leave me here all alone? I searched world over and thought I found true lovers. Apple. I gotta get caught up on the news. Apple can drop more, but we're at support right now in the 1 hour at the 200, which you've been working as a pivot point. There's resistance. Now we're at support. So I don't want that one. I want this one. Tesla. Remember at 308, 310 area on Tesla. We're at the 200. What is this? What the hell is going on here? Whoa! Already? Golly. NVIDIA. It's going to be a die by the dip moment. SPY has a double bottom it open. Oh, Jim, turn on your flat phone. Brazilian women have nice butts. I've only had 3 hours sleep last night. So there's SPX. And we're off to 2 minutes now. What's going on here? I'm knocking this double bottom on the video a lot. Google's down, Tesla's down $5. SPY's down $8.92. SPY could do a triple bottom down here. Let me see here. We got the body there, so it's already broke that support. Let's clean this up. I don't know if I want to use this chart or not. It's got too much crap on it. You're gone to that window. I don't want to use it. To deal with these charts. Yeah, I'll be yawning. I don't want to do too much trading today. Get well rested up. Oh yeah. I want to be in the little red schoolhouse. I want to be in the little red schoolhouse. The video is flagging. I think we got to break the orb on the 1 minute. I missed me when I was gone. Jim's back. Uh-oh, already got a song out. We'll have to play that. I hope you got something about Brazilian butt cheeks. Bull was a huge buy on that dip. Hello, Angel, Randy, Sheba, Jesse, Johnny, John. Johnny from, there's two Johnnies in here. We got a Ringo, and then we got one from Texas. I'm back. Link, Livid Goose, Magnificent, M. Barto, O, Zero, or O, and Ricky, and Subway, and S for Studio. I remembered. I don't know. I think I'd want to be long, but no. I got to get caught up on the news. We got to break the 200 on the video. SPX has to go past 368,993, 6390. The 9. Could be by the dip by it. I went by here. I'll wait for a pull. We got 3 white soldiers, and the candles were getting smaller as the 3rd soldier came in, which means we might pull back a little bit. In fact, I need to make sure my pipe board's up. I've got it. Yeah, this ain't good. Today's the 2nd. Anybody here live in Charlotte? If your town's anything like the airport, I wouldn't live there. seemed to me like the airport should be pristine, or build a new one, a new hub, get rid of that one, just bulldoze it. Fire half the staff. Yeah, I didn't take too much of a liking there, that's for sure. But, AMD had a tweezer bottom it opened. The resistance has been established by the orb. Mine would be the bodies of the candles. And we just busted it. Right there, 159.67. I'll go make my tea and I'll see if that'll help. Get me in dialed in. SPY hasn't broke out yet. You got a resistance line to break on SPY. And we're going to put it, we got two of them. Well, that's kind of, let's use a different chart, shall we? Not that one. That one will work. Hey. I would rather buy the SPY. Go with that top right there. So it's definitely right on the 63. Somewhere around 637.56. That breaks, we'll run it to 638, 90 something. Yep, I'm gonna start doing more traveling. Haven't got over nothing yet. Get caught up. How was my flight? American Airlines wants to know. Well, if I can make a comment about the Charlotte airport, I'll tell you. Our records show that you flew from Springfield to Punta Cana, or PUJ. That ain't Punta Cana, is it? I guess it is. They don't give meals out anymore. Oh, I didn't put the timer on my tea. Give it another minute. I think I've been here for 2. Made it back safe. This is August's invoice. Okay, get ready. Prepare ye in the name of the Lord. It's trying. It's trying. So let's see the SPY. 638 calls, and then the SPX when it loads up here. Kind of stalled right here, so they're thinking about it. We're squeezing, volume squeezed. They can run up to 638.88. So the 638's at 138. Jim, how could you tell that that was getting ready to squeeze? Well, there's 3 reasons. 4 reasons. And I'm going to chart them out to you here. Prepare ye in the name of the Lord. When you do a fast scalp like this, you want to take profit. I'm out. I'm out. So we've got the SPY, Lotto, Strike, 638, at 1.38 to 1.78. And I'm going to show you why. So prepare ye in the name of the Lord. Okay. Are we ready? I'm going to count the reasons why this trade was good. We have a tweezer bottom at open. Jimmy said it'd go to the 200, so you're at 207. I'd get out of this trade. You got a tweezer bottom. You got 3 white soldiers. I'd buy put, maybe. Each one of these candles were getting a little bit smaller, so I called it to pull back. You had another tweezer bottom right here. Another tweezer bottom, then you had a double top to the 63 and it consolidated. You had another tweezer bottom right here. So you had tweezer bottom, tweezer, we had 3 white soldiers, tweezer bottom, 3 white soldiers, tweezer bottom, 3 black crows, a spinning top with a tweezer bottom, and again tried to do the 63, but this time it budged above the trend line that I drew. So reason number, we got how many reasons? 1 2 bits, 3B, 4. Then you draw a trend line for resistance, and we had a triple top, number 5, and it started to break above that triple top. Then you had this engulfing, you had this candle, which respected the triple top, and it ran all the way up to the 200 for an exit idea. I got out on the 3rd crow, 3rd soldier. So you had 1 bits, 2 bits, 3B, 4, 5 reasons to take that trade. Even once it broke the resistance line, you still could have took it here and got out with 3 white soldiers to the 200. Do you understand me? Dang, these things are at 225. $235. God. I just left $600 on the table. Market loves me. The market loves me. We missed you, Jimmy. Yes, I had an amazing vacation. It was just hard, couldn't communicate well with the chicks. And what American chicks were there are already taken. So, big language barrier. I told this one girl, I said, "You got a nice butt." She said, "I don't speak English." "You're beautiful. I don't understand." "Can I take you home with me? I don't speak English." I wasn't prepared for that. You got on the 30-minute on the /ES, you're at a triple bottom, almost a quad bottom. SPX did a double top. Yeah, I'm already wanting to go back. Rod Stewart unleashes on Donald Trump in wild tirade. Screw you, Rod. We notice that you aren't taking full advantage of your Prime membership. As a Prime member, I didn't even know I was a Prime member. You have access to all the music. No. I don't do that. I hope I'm being charged for that. Better not be. We're retesting the old resistance of the 200 SMA on SPY. I'd drop it a notch, maybe the 640s if we think we're going to hold this support. PMI for August was 53 versus 53.3. U.S. pulls TSMC waiver for China shipment of chip supplies. God darn, man, the 238s just had a big old spike. Golly, I'm not even going to say it. Woo! Market loves Jimmy. We broke the resistance on the chips. Fund my account. What? What the heck is this? The following document required your acceptance. Tasty Trade reserves the right. Have you received, read, and understand? No, I have not. I gotta read my Tasty Trade. Looks to me like I gotta. Definition: introducing broker, clearing firm. Set the rules and regulations. Your account, Tasty Trade, of any transaction makes it subject to the firm's trading rules, policies. God, do you want me to read a book? I don't like small print. Tasty Trade account may be terminated and closed by you. The agreement contains a... The agreement of all the agreements governing the Tasty Trade securities account. Well, that's not right. I got to read all this before I can sign it. They sent me a book. Whose domain name is registered as your account, Tasty Trade. Transactions make it subject to the firm's trading rules. Customer relations with trading. Kind of sucks. Okay, we're retesting support again. We got to hold this support.
Count to 3 and trade with me, but count to 4 to make much more.
He says, I gotta finish this document shit. The flap has been updated. Reload now and get the new latest features. My margin account. Okay. I think I'm ready. Taste Trade's asking you what? Show notifications. Remember, block. Say hello to your, oh man, to your new updated account menu. Oh God. Your account menu is located. Opening the account menu displays all accounts you have. Your active highlight all actions would take to apply to this account until you switch. Your active account is clearly highlighted. Use a T-shield button to quick switch between your account for trading without disturbing the workflow. Request pattern day trader resets. What? Better not. They better not go. Okay, here it is. Support. The position page on your. Thank you for taking a tour of our new account menu. Well, how do I don't like. That's strange. Okay, that's better. I got to get accustomed to my new platform here. Why they pull this crap on me? Yeah, that's better. Okay. Spy's dropping here. We're back at, I think this is the final retest of support. And I'm going to move these calls up. This is it. The 639s. I'm going to get 5 in the order. The 639s for Lotto. I'm not in them yet, but I'm going to be. We got lower lows. We got a fallen wedge. I told this girl, I said, "You're beautiful." She said, "I don't speak English." I said, "Come on. You don't know what beautiful is?" "I'm sorry, I don't speak English." 639, so we're at the 63, so this is going to be it. If not, we're going to pull back to here. Spy calls. We're at resistance at a 1, 2, 3. That's 114 to 144 off the 63. So that's called a falling wedge with an inverse head and shoulders. We come back and hit the right shoulder, but there's a wall might hold it up. You have a nice pair of legs. I don't speak English. Yeah. Jimmy, evaluate XBI. I'm getting ready to take a trade. XBI, is that some kind of... Oh! Sue Orman reveals her favorite stock right now is an investing mistake that shaped her strategy. The FDA's official surprise departure means for uncertainty in biotech. Well, why is it up then? Can you ask that? Is it over? Because it sold off? No. Huh. Hedge funds are building a towering wall of bets against stocks. There's no news out on this for this pop. Yeah, I'm a little tired. I don't think I should do much trading. Jimmy's not even watching the room. Ah, how dare you? I'm watching. I heard you play the washboard. I don't speak English. On the 1 hour, on the Spy, we had a tweezer bottom. We just broke the triangle. The calls are now at 156. The 639s. Okay, prepare ye. We're going to hit their shoulder for the right time. This is going to be very meaningful if you know what side of the street I'm on. This will tell us if we're going to be busy, bullish the rest of the day. That or we just have one big knife. The 639s. Right here is the right shoulder. Prepare ye in the name of the Lord. It's got a hold right here at 116. 1.16. I am too tired to be trading. Come on. This wears you out. Like I said, I only had 3 hours sleep last night, so it might not be a good idea to trade. I know it kind of be like this. It was very stressful coming back and going through Charlotte Airport. Let me see. Go put on some smelly cologne. That might help me out. Right now, we're kind of bearish. We got 3 black crows. Let's go for it, Jimmy. Oh, I'll be right back. I don't know if I want to trade. We could go back and hit the bottom of the orb that was established this morning on the 1 minute. Yeah, gummit. 106 to 125. Crowd strike down 1250. Nike looks cheap. Almost a double bottom on the 20-day. There's, dang, 142 on the SPY. I missed it. That sucked. Got a bull flag. There's your resistance, double top. I'm gonna go get my chicken soup, see if that helps me out a little bit. The IRS lady gave me thumbs up. Snow down $4. It's at the 200 on the 1 minute. Market seems a little bullish today. We're just kind of consolidating on the dip for scalping day. There's Amazon, got a symmetrical flag. That's a symmetrical flag. It means it's got to break the 200 or the orb before it starts to really run. 225 something. Google. I'm watching Okay, we're coming up to resistance on SPY. Oh, Jim. I'm back, Jake Paul. I'm here. Ladies and gentlemen, the SPX is standing at the 63 EMA. I'm dialed in. It's now or never. the 6430s. God, that soup's good, man. I don't think I ate anything that good in Punta Cana. It really is some of the best soup. I ain't kidding. I missed it. God. Crowd's going wild here at the sports arena today. We got another megaphone going on. Show us, Jimmy. Got a story to tell you about Punta Cana and that chef manager. I'm going to show his picture here. Okay, get ready. If we come down and do the 3 on this thing, I think we're ready to take the trade. One big old fat candle. Let's do it. I am looking at the 6430s. Prepare ye in the name of the Lord. So I'm going to show you a picture of me and the cartel member. So I'm sitting here. Get ready. I'm going to be telling the story while we wait for this thing to hit. And then I'm going to say, jump in. 6430s. 5 contracts. Prepare ye in the name of the Lord. Get ready. Okay. You hear me? I'm not going to miss this one. 160. 155. We're getting close. Right about now. Give me 150, please. 155. SPX. Right now. We want this to hold at 145. SPX Lotto calls strike 64.30 at 145. Here we go down a one-way street. All the bazillion women I wanna meet. Hey, hey, for the butt cheeks. They're all standing around. Sorry, no speak English. It's alright. You have nice butt cheeks. Megaphone, all alone. If you can count to 3, you can trade with me. And if you can count to 4, you just might make a little bit more. So we need this to hold. If not, we got to jump out. And that ain't no doubt. That chicken soup did it for me. I should ask that guy if he wanted me to cook chicken soup for him. So we have a 1, 2, 3, and up here we didn't quite get the bodies to this here resistance line on the megaphone. Come on, hold it. No. Hickory dickory dock. The mouse run up the clock. Risky. Hickory dickory dock. The mouse run up the clock. I got a very good tan. Risky. Come on now. I think I'll get 5 more to add to my chest. I don't know. This don't look good now. I go for it. What the heck? $1.15. Kind of bearish looking, but we'll see. Come on. I've had a few fake outs today. Come on. So I'm sitting here. This is the buffet where I got to say my goodbye to this guy right here. He was the manager of all the restaurants. So when I first met him, he says, comes up to me and says, fondue tonight. And I swear he said 2 o'clock. So I show up at 2 o'clock. And he said, no, it's 6:30. He says, I'll do it right for you. I'll give you the best seat in the house. So I'm sitting there. I go into his fondue store. And he puts me in the special booth. And I said, I don't know what I'm doing here, but you got to, help me. So I said, you'll get shrimp, chicken, and beef. And we'll give you shrimp first. So the lady comes up. She looks like she's a wrecking ball that somebody could hurt. She could hurt somebody. And she shows me how to do it. Come on. Yep, now it's at 95. I'm not liking this. I need a rebound. Let's go. I need 130. So I'm cooking the fondue up. And I already had the shrimp. So I take these little steaks right here and I poke each one of the chicken, the beef, and the whatever kind of meat that was, like a ham or something. And I dip it in these sauces, and I stick it in that kettle. So I eat all that, and then he gives me the dessert and chocolate. Now we're at 90. So I said, I'm done. Thanks for the meal. And he said, I got a special thing for you. I said, what? So he gets this, I didn't take a picture of it, I wish I would have. It was this gallon jug mixed with liquor and some kind of leaf substance. And he gives me a shot of it. He comes to the table and he says, I got something special for you. I said, okay. And I asked him, I said, what is it? He said, marijuana. I said, what? Marijuana. So everybody around me, all the people at the tables, especially these rednecks from France, I think, all stared at me. And I took that shot. And I didn't know how powerful it was until I got to the show that night. I said, jeez. He gave me some infused liquor with marijuana. No, that was kind of funny. I mean, I didn't expect that at all. Not at a resort. And I know he doesn't offer that to everybody. It seemed like it'd be against their policy. I wanted to ask, you work for the cartel by any chance? We got to get above the 9. If not, I got to jump out of this trade. You're not looking too good. Four more minutes to 11 o'clock Eastern time. We got a broadening out of the megaphone. Come on, we're at 105. $110. So we broke the 9, but we got to break this here first resistance on that triple bottom. It could have been just the rum. It felt like it had honey in it. It sounded, you might be right about that. Come on, baby. Getting a little bit too far out of the money. I'm not liking it. Need to do something real fast. We're squeezing between the 9 and the 21. Let's go. Do, 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 do. Waiting. the longer this waits, the more bullish I'm going to become. I think they're waiting. Everybody's talking about the Trump news coming out. Probably nothing big. And it looks like my forehead's starting to peel a little bit. That and my nose will probably peel. Yep, it's peeling. We can come back and hit the bottom of the orb, 636957. You got an inverse head and shoulders on the SP/ES. On the 30-minute, we're at a pivot point off of inverse head and shoulders from triple bottom. I'll rip back. Oak. Now we're way out of the money. All of a sudden it just changed on me. Google's at the 200 EMA. Tariff uncertainties weighs in on investor sentiment. They've been saying that for months. Equity futures lower on pre-bell Tuesday mid-court rejection on tariffs. That was definitely a Biden judge activist. You got a new snake here, breakout, pullback, high or low on Google. Symmetrical flag out of a snake. Yep, that ain't gonna work. ISM manufacturing PMI adjusts 487 versus 49 estimate. Okay, the wicks, we got a 1, 2, 3, 4 coming up on the video for the day. About snoozed off there. Go on, baby. Tesla has 1, 2, 3. Man, I'm tired. Very tired. Well, whew. SPY hit my low support, 636.20. To the penny. God, I'm tired. We're at the pivot point. AMD. Google had a new low and hit a fib.
Of the economy for big banks and the best position financial stocks. Trading 360. We'll be right back.
Looks like we're doing a double bottom again.
Morning movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, morning movers only on Schwab Network.
So let's
Trading with
see.
Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Trade 360. I'm Diane King Hall, live from the floor of the New York Stock Exchange. Time now to spotlight the banking sector. Joining us now for perspective is Kenneth Leon, Global Director, Industry and Equity Research at CFRA. Ken, thank you so much for joining us. Financials have been a strong performer year to date, and many expected them to perform well this year. When you look at year to date up through the end of August, up more than 12% as a group, and then you have some strong performers within that group. You know them well, many of the banks. So let's talk about this performance. What do you see as, what would you say have been the three drivers within the banks so far this year?
Well, it's great to be here, and financials also are one of the largest sectors when we look at the whole market, or the S&P 500. We're overweight on the financial.
The door issue is one of them. That goes left in the main lobby. I don't think they painted that door trim on the west of the building. The outside window shutters need to be restained or something. The ladies' bathroom downstairs sink is out of order. Maybe some of the paint on the front door needs to be repainted on the inside. And outside. The outdoor light on the east side of the entryway of the building. Definitely not a good day here. We're on the 200 on Google. Looks like the market's in a major correction. Let me see here, something else. Chart up the SPX and the SPY. On the daily. Definitely the bathroom seat downstairs in the ladies' restroom. And that door trim on the west side of the entryway needs to be painted. Oh man, I can't believe she's thrown that on me already. We're at the 9. So this is a major support right here on the SPX. We've held the 9. These are weeklies. So 1 month, 2 month, 3 month, 4 month, 5 months. We've held the 9. So I think that's a major support level. Somewhere around 63.37.89. If that doesn't hold, tempting I need to use the wick on the weekly. So your next support would be this double bottom. Right around 62.36. So another $30, $35 dip. Somebody on mic? What's that? M. Bartow, your mic's on. Sounds like you're throwing up. I muted you there. Damn, he's at the gym. Must be one heck of a workout. Can you hear me? Okay. I didn't want to make sure. I just muted the server. That's all right. So it could be a little bit higher. Maybe 62. Is that lower? Yeah, 62.57. Maybe we'll just go up to this next one right here. We got to hold the 9. If we don't hold the 9, it could pull back. So let's go to the daily. I'm nodding off. We're at the 50. That 9 EMA is the 50 SMA. So that's pretty solid on the daily. 63.37.89 is going to be my next support on the SPX. And then I'm going to raise this up to 63. Take this off. $62.61.37. Would be the next two supports. And we'll go to the 1 hour. And we're at a head and shoulders. We got a gap right here. So let's try this here trend line, see what this does. Straight across is 63.64, and that'd be the bottom of that wick. So that's where we're going to put the first low support, right on the bottom of this gap. So that's your channel of support right there, and then your pivot points right here. Jim's dialed in. Keep it just like that. So those are your major four supports right there. The first one being right here at 63.62. $63.54.36. Now let's do the SPY and put this in the room. Let me type them in here. Come on, you idiot. First support 63.62. Second 63.54.86. Third 63.47.45. Whoop. And low gap 63.3 7.89. Okay. I no speak English. My last day, this guy I met from Chile. That spoke English. And she said, you want to have a beer? I said, man, it's only 8:30. I got to get ready for my trip home. He tried to talk me into it. I said, oh, here we are at the first support. He said, come here. I said, how about having a coffee martini with me? I said, man, I can't. I've never had one before. So I went back to my room and I asked myself, should I go try one of these? And I went up to the front bar and I said, make me a coffee martini. He said, we'll open in 10 minutes at 9 o'clock. I said, okay, I'll be right back. So I went and had him made me one, and I took a taste of it, and I said, ugh, this thing's nasty. I know that door trim on the west building side of the building needs to be painted. They've talked about it a couple times now. And the light fixtures in the front needed to be new bulbs. I'm a little rusty. I'm trying to think all the things that need to be touched up. Definitely paint with scuffs and stuff on the inside of the building. I'd say the three major things would be the door trim on the west side and the front door And then that French door needs to be looked at. The light on the east side of the building needs to work. And the ladies' bathroom sink downstairs. So let's go to the SPY. So everybody got the resistance levels on the SPX? Or support levels? I took the loss on my calls there. Oh. So let's do the SPY. I'm going to put this here chart on StockTwits so everybody knows I'm back. Then I'll go to the SPY. So I traded the SPY first thing and got about 300 out of it. I'm only up a little bit now because of that other trade. So we're going to go to the weekly. Now we got a double bottom here right now at 633.38. So about a $1.80 dip. Triple bottom with the wick. Let's go to the weekly. We're at the 9 on the weekly, so we're going to paint that up. Everything's at support right now. We're at the 9 on the weekly. This is the weekly here, so I'm going to take the wick that little nod kind of helped me out. I feel a little bit stronger now. There's your pivot point. Same kind of pattern as we did on the SPX at 620. So this one here is going to be the 9. I'm going to do it in blue. And the next one is going to be this double bottom. And we got to go with the wick. Actually, I'm going to bring it up because that's where a trend line is. So that's the yin yang, the quad breakout. 1, 2, 3, 4. And then we'll go to the daily. And that's right off the 63 and the 50 SMA. So both of them are game. And I don't see no gap in here. Right here is a gap, but that's pretty good. That's a if it gets serious, we got a yin yang between that double top breakout and that gap. And that's at 604.10. So these are your two major support levels. Then bottom line, if it gets real bad. But this is the 9 on the weekly, so if that holds, and we got a double bottom right here. It's on the daily. So we'll type these in now. Go to the hour. We're definitely at the double bottom on the daily. So let's type that in up here. Is that the double bottom on the daily? I have to go check that. See if I got that memory right. And that's the first white line. Double bottom on the daily. No. That's the, what is that? What the fuck is that? I can't remember what I put that down as. I don't know. What did I put that down as? Oh, the yin. No, that's down here. Yeah, I'm a little rusty because I can't remember what I put that line on there for. Oh, There it is. It's a double bottom. Double bottom on the daily. That's right. And the next support was the 9 EMA on the weekly. And that price is 6. Okay, let's put the prices in here. The 9 EMA is 632.42. And then a 622.88, which is a pretty good drop, is a yin yang. On the 20, and that's another double bottom, so that's a double bottom on the it's 2 double bottoms. We'll raise it up to the 63 on the daily. So 624 is the 63 EMA. On the daily. And then the lowest support, the 604. And what was the 604? Was it gap? On the daily. $604 is a gap fill on daily gap. $624. Fuck. Oh, it should be skipping this right here. That previous high right there, that quad top, triple top, There's your quad top right there. That runs right into that. So that's got to be our next one. We'll not worry about that one for right now. And we put that down already at the 63 on the daily. So that's a real strong support at 624. Then the next one's going to be right here. $6.13. I'll erase that one. I don't like where I put it. Right there. $6.13. $6.13 is the triple top. On the daily. Which is, what the hell is he talking about? And the ladies' bathroom sink downstairs is a major priority. Okay, SPY double bottom on the daily at 635, where we are right now. And looks like we're trying to reverse. The 9 EMA on the weekly is 932.42. And the 63 EMA on the daily is 624, with a triple top on the daily breakout into a quad. But the triple top resistance is at 613. And the 63 EMA on the daily is the quad breakout. Or is that lower? The 63.90s are up $70 from the bottom there. We're at the 63 right now on the 1 minute on SPY. What's LFG mean? LFG. What's that mean? Oh, who's this punk? Tammy, bye-bye. I get sick of people using spam on me. Especially when they have no followers. Okay. /ES hit my support level on the 30-minute. With a tweezer bottom with 3 black crows. They moved up a little bit. How'd Funk do Friday? Let's see. I'm gonna make me a tea in a second. YouTubers, that was the resort. The guy I met from Chile took this picture. That's the honeymoon suite right there. The weather was just perfect. This was early morning. A little humid. A little hot, but I didn't think it was all that humid. Definitely hot. Not like it is here in Missouri. Okay. Everybody here? Very quiet. And I'll be right back. See if I can. So I'm going to make a coffee. Drop down in price on this thing now. So we've had a bottom here. If we come up and we break the 63 and break this double top, I think we'll go higher. We held that first support, came back and retested it twice, broke out, hit the 63, broke out of it, came back. So if we come up again, that'll be a double top. Then that'll be your test. Then I'll prepare to take the trade if it breaks and run it up to these 3 different levels. $63.71.29, and I'm going to do the 63.90s, and I'm going to get 3 of them. And the order is set. You know, I'm a big Trump supporter. Y'all know that, but I'm kind of getting a little annoyed with these tariff things because it's building an alliance of the communists. They had a big, I guess when I was gone, they had a big old thing. And I don't think we should. Because most wars most trouble starts with economics. I don't think we should be isolationist, although I don't support world order, but that's just my opinion. I'm just getting a little bit too carried away with it. And it gives the dingbats in the country more momentum. We're getting ready to squeeze right now. We got a wall, pretty big wall. We got the orb and the 63, and we're building above the 9. So we're getting ready to squeeze. I don't know which way. It's not the right time of the day. It's 11:34. Can't believe I let myself get that burnt. Tried to listen to somebody's advice and it didn't work out too well. Should have just took my own. I'm gonna go make some coffee. We're breaking to the upside. Okay, here we go. $63.90s. We'll see when to get in. I don't want to take too many chances today. Not trusting this stuff. Boom, 320. Hit the 200 EMA. Now the next three resistance levels are these things right here. So you draw a trend line across each one of them. We hit the first support that I called. So none of them hit the moving averages. I'd rather go with the moving averages. I'd rather go with these two right here. La 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 la. Okay, we pulled back here. I'm gonna go get my coffee. Three and a half hours in a plane is not an easy ride. In an Airbus. Especially if you don't... I mean, I had to watch what I drink. It's hard for me to go to the bath, go pee in an airplane for some reason. Here we go. Right off the 50, that was $90. India challenges high U.S. tariffs on some copper imports. U.S. holds back on China threats, trade threats, as it weighs Russia's sanctions. God, look at that. 3 white soldiers. starting to get bullish. That's a SPY. Oh, well. $4, and there it is to the 200. Boom. That's a beautiful call on the bottom. We just hit the 200 SMA just now on the SPX. From 210 to 410. The 6390s. Remember how I got that first support, right? Was it the 9 EMA? How did I get 6286? For support. That's a different number than what I got here. 61.9. Oh, 6,200. Yeah. That double bottom there at triple bottom on the 1 hour, and on the daily fuck, can't read nothing now. That's that orb, no wonder I can't read it. That double bottom. Or triple bottom if you count the wick. Right now you hit the 200. So it's an exit idea unless you think we're going to break and run it up to the 200 EMA, which we just now broke. 6390s are just one notch, two notches out of the money. And the squeeze has tightened. From 63.95 What's that? What's that word mean? QNNN announce. Oh, announce. Trump is going to announce. Oh, what's Trump going to announce? Sending troops into Chicago? God. Always clean as Jim.
These funds can be used for debt, unexpected bills, or personal expenses. This new program is based on your credit profile, and even with bad credit, you may qualify. This offer is exclusive to Missouri residents. Same-day funding is available. To complete your application, press 1. To be removed, press 9. Again, press 1 to complete your application, or press 9 to be removed. You can also call 877-408-0227. You are now being placed on the Do Not Call list. We apologize for any inconvenience.
They want to give me $52,000. Bill Clinton dying? Huh. He was a party boy. I hope not. He's not in the best of health, that's for sure. I don't see him speaking here. Is it the India tariff?
definitely to the bullish camp right now as far as
Mexico City,
the
I
streets
mentioned,
coverage.
Lima,
Yeah, we
Peru.
talked a lot of.
All double and triple what they are. So do you want to live in places like that? I don't think so. I don't think so. And I think the people in this room, if you wrote correctly, you'd see, look at the kind of numbers we have. DC, 41 per 100,000, number one that we can find anywhere in the world. Other cities are pretty bad, but they're not as bad as that. Is that where you want to live? The reporters of the world? Juvenile offenders and crimes against persons, as they say. It's getting worse. Not getting better, it's getting worse. And we had a recent indication. There was a story about a man who was just left. He quit because he was asked to do phony numbers on crime. And we're going to look into that. I think Pam is going to be looking into that. But he was asked by the city, I guess, we don't want to show the real numbers. Let me do numbers so it looks like it's going down. Not going down. And under Biden, it was a disaster. And nobody did anything about it. We're going to do things about it like you wouldn't believe. Every American has a constitutional right to be able to...
Crime is bad. I know because I'm out in it every night. Just coming back to Springfield last night, had some punk try to chew me out at McDonald's. We hit the VWAP on the spy. Bingo. Okay, we're dropping again. We're at a support. Oh yeah. Now if this stays this trend line, we're bullish. We come up and retest the VWAP. Where's the spy at? God, these spy calls are cheap. The spy calls are cheap. 637s. Oh, I don't want to do these. These are lotto. Let's go out the next day. The 639s. September 3rd. I think you're all talking about doing the window panes in the front, staining them or something, all the way around the building. What's he gonna do? Is a question. Are we gonna break past the VWAP this time? Let's look at NVIDIA has to break the 200. AMD has to break the 200. Meta broke the 200. Apple has to break the 200. Amazon rebounded. Jeez. We're at the VWAP. It held that yin yang triple top break to the VWAP, pulled back and hit that previous support level. And they're now at 129. Good. Broke the V-walk. We broke the VWAP. How did Friday go, everybody? Can I have some answers, please? Jim, you forgot to put creamer in your coffee. We're at 150 now on the 639s. Let's go higher. I'm going to ask the question one more time. Is anybody listening? How was Friday without Jimmy? It sucked. Livid Goose made a whole $10. Well, right now, you could have made $320 if you bought 10 of these at 118. Boring and slow. Well, being stuck in a plane for 3.5 hours. Once I went back from, what was it, Charlotte? I didn't have a problem, I don't think, getting out of Jamaica, but Charlotte, God. That place is screwed up. That airport. I talked to a girl this morning. She said, I like Charlotte Airport. And I said, no way. That's about some of the rudest people I've ever seen. We were now at 158. They sent me in 3 different directions. I had like an hour and 5 minutes to get on the plane. And then I put a thing of water in my, as I went through security, and you can't put water in here. I got put to the side. Then I lost my phone case. And then I picture recognition. They take your photograph now. So if it don't look like it does on the passport, and you're not supposed to wear glasses, so I put glasses on. I got pulled to the side. And so you can't wear glasses. And then I went to where I was supposed to go. I couldn't figure out what gate I was going on. So I went to the gate where I was supposed to be, and Delta was flying that gate. And someone said, well, Delta's doing this gate. I said, well, where do I go then? American Airlines says I'm supposed to be here. And then I sat down in my seat in the Airbus, and the guy sits next to me and says, do you mind if my wife sits next to me? I said, no, I don't mind. So I went up and got his wife and put her in my position, my seat, which I loved, but I gave it up. There's advantages to having the windows. Then on the flight back, I about froze to death. Do you got a blanket? No, we don't have blankets. I said, what? We're now at 167 from 118. Off the yin yang, the triple top breakout pulls back. And then remember this. 2 bits freebie hits the VWAP, pulls back, bounces off the triple top. I said, we're going to come up. Are we going to break the VWAP? And what did we do? Jim, I took that trade at 120, and I'm at 162 now. It ran all the way up to 168, 170. Should I sell it? It does have the possibility to pull back to the double top breakout on the VWAP. So you could scale out, and if it dips, you can add them back, or you can just sell it all. You're up 40 cents, 45 cents. I never thought about that, Jim. You're so right. You're always so right. You're now at 72 cents.
You're down 95%. Have you ever considered selling?
No, I can't.
You're down 95%. Have you ever considered selling?
No, I can't. That's a no. You're up 95%. Have you ever thought about selling? No. No, I can't. No. Don't you think it's going to pull back to the VWAP, sir? It can, but I'm not going to sell it. Do you think you should take some profit, Jim? Yes, I would. And if it did dip, I would buy more. Jim, did you bring any condoms with you when you went to Punta Cana? No, I left them here. Every chick, they all showed butt cheeks. I mean, I'm going, even the ugly ones. I couldn't believe it. Didn't matter what size. Well, the Muslim girls didn't wear one. There was Muslims there too. Or from India with the little dot on their forehead. I asked this one girl, I don't think she understood me, but I said, her and her mom was standing on the balcony, and I looked up at him. I said, "You want me to take your picture together?" And the young daughter says, "No." I think she I was going to use their camera, and take a picture of them together. And her mom smiled at me. I think they were from England. Jim, what's your next target on the SPY? We're curious. Well, let me see. We just broke resistance, so we got a double top up here. Let's say 638.34 has to break. $638.35, 637.35. Now what the hell? 638.34, you idiot. This one don't count. Well, that could be support. That's the VWAP. That will be support. And after we break 638.34, the next resistance is right here at 638.91. Jim, you got in at 118. Now you're at 185. Have you ever thought about selling? No, I can't, because now we're at 192. At 638.91, will you sell any then, Jim? I might. We'll just have to see. You're about there, Jim. Have you really thought about selling here? No, I can't. I think I will. Well, the Larry thing is here. I found it.
I waited all day for you, Larry. I've waited all day for you. As my first cat.
We'll watch that again. We're at 2:03 now.
I waited all day for you, Larry. I've waited all day for you. As my first cat.
I waited all day for you, Larry. Stock, I waited for you all day. And I turned my head, and all of a sudden, it knifed. Uh-oh. What did Jimmy say? $638.91. What did Jimmy say? I'm just curious. Hello, Larry. Larry. $2. I'll take it. I'll take some of it. I think you ought to know that I'm not here to play around, that this is a serious game, and we don't mess around here. I want to make that perfectly clear. Larry. Damn, Bardo. I can't believe you did that, Jim. I waited all day for that breakout. You sat here and you sold it. Chop, chop. Chop, chop. The circle being broken. Oh, by Lord, by and by.
Yeah. Yeah. Jim's back, trading the king on his throne. Punta Cana's gone now, he's back in his zone. $40 for a hooker, he'll never forget. Some deals are shady, but fewer regrets. Markets of money maker, turn on the machine. Buy low, sell high, living the dream. Stacks on stacks, financial feast. Jim's the ruler, gotta count.
Washboard Jim's back. Kind of wants to break. There goes the drop. Where's it going to go to, Jim? Well, we could get close to the VWAP if 638.34 does not hold. Very interesting. Larry. Damn it. Dip. Well, I was expecting to come back and win the Powerball, but I didn't. Kind of hurts. There it goes. Now it's coming back for Uncle Jimmy. Remember, first support 638.34. RFK Jr. sets CDC priorities in OPED after leadership shakeup, Bloomberg. Fed Reserve repo facility has tumbles of fresh new lows since 2021. What? Republican U.S. Senator ENST announces she will not seek re-election. Okay. Slash ES bounced up off the 30-minute that Jimmy called a little bit ago with the three black whores. somebody's messaged me. It's Ernst, not... What'd I say? Did I read it wrong? I'm curious. ENST is what it says here. Senator ENST. I think they did miss the R. Does she have cleavage? That's the question. Does she have cleavage? Okay, we're pulled back to support 638.34. Oh, she has cleavage. Better not tell Nancy. Nancy will not like that. I'm very tired. It's now 2 o'clock Eastern Time. Does anybody want me to give you my blood test scores? My abs baso at the current right now is 0.00. I have no abs. That's a lie. My bun, B-U-N, is at 18. My triglycerides are at 122. You know, that's a pretty good jump right there from 83. Wonder what that is. Triglycerides. The doctor didn't point that out. Where are you? TRIGLYCERIDES levels. Triglycerides are the type of fat found in blood. They are measured in milligrams. According to the Heart National Blood Institute, less than 150 for adults. And my triglycerides were at 122. So they were good. Less than 150 milligrams per deciliter, or less than 1.7 millimoles per liter is normal. Cholesterol at 194, up 14 points. So let's see. CHOLESTER cholesterol levels normal LEVELS. Okay, they were at 194. Understanding the levels and numbers. So heart healthy, under 200 is heart healthy. So take that. Mine were at 194. And glucose, potassium. Normal levels of potassium. Normal levels of potassium, mine was at 4.2. A healthy blood potassium level is 3.6 to 5.2. Last time I was on the borderline of 3.8. Having high blood potassium higher than 6 can be a danger. Danger, Will Robinson.
Danger, Will Robinson.
Yes. So that's that. Now are we expecting to drop here? Is the president speaking now? Shit. What's this guy doing here? $63.80s at what? Filled at 410. God. What the hell's wrong? What's the deal, Rob? Or R? Shit. I don't think I can let you get away with that. I protest. I can't wait to go to sleep. Doo-dah. Doo-dah. I mean, I only had 3 hours sleep. I've got so much adrenaline. I had so much adrenaline. Okay, we're coming to the VWAP. VWAP. Okay, here we come. Come on, baby. Get ready. VWAP. The buys are coming in. Prepare ye in the name of the Lord. Nikki, who was that? I'm watching the VWAP. Okay, we're getting close. Getting close. He's watching it right here. Drop this down to 6,400. The SPX. What the hell's eye candy? Dadgummit. Should have grabbed him right there. I was watching it real close there. Well, that failed. Just wanted to drop one more candle. I'll still wait for it. I'm cleaning off my desk. Didn't see him right there, you idiot. Okay, we're getting another chance. Okay, we're getting close this time. To 127. This is where I don't usually do. My average lately have not been very good at this time of day. Been getting caught a lot. Right about now. We got the VWAP, we got that trend line. Trump to review approval of wind farm off Massachusetts coast. 6400s are at 210, 215 on the SPX. And we just now went below the 200. I don't like that. Bounced right there off that trend line. Dadgum. There she goes again. $50. $6,400. Okay, we're coming back down again. Now we're at $2. So see? VWAP. It's 135. These things are at 155. Slash ES broke the VWAP. Pulled back to the first support on the Fibonacci's, and I have it 638,610, and I had 638,550. It's a bull flag. It's the biggest sell-off we've had all day at 150. Better I move it up a notch to the 95s. Come on. Let's go, little John. Good job. I gotta go, it looks like. Dang it. Got contractors working on a building and I gotta go check it out. And right here's 105. Dang gummit. Oh, shoot. I'm going to turn on the TV. I'd like to stay here and take this trade. We could hit the 200. So if we have like a big fast gap down to the 200. But I got to go. If it breaks out of this flag, you'll move up. If not, we can pull back and hit the bottom here, but right now it looks like it's healthy. I gotta go. Oh God, 195. See, right when I said it was healthy, boom. Woohoo! Yeah. 105 to resistance. That's nice. What do you think about that, gentlemen? As I get ready to leave. That's how we do it. Bull flag. Jimmy called it bull flag. Inverse head and shoulders. And I said it looked healthy, and all of a sudden, boom! I'm happy. I'll be back. Turn this TV on.
Macro.com and Tai J. Young, CEO of Tai J. Young Wealth Management. Thank you both for joining me. Joseph, let's start with you. Very consequential week, very much for the Fed. What are you watching in particular?
Well, I think Chair Powell has already promised that he's going to cut rates in September. They seem to make her speak in a little bit of a mysterious way, but he's all but promised a cut in September. So that's in the market, and the market is pricing it one more rate cut. But I think going forward, what we really want to focus on is on the politics, because I think the president is, just as he's changing the global trade system, he's also renegotiating the structure between the Fed and the Treasury. And it looks like we might have a monetary policy of Fed that has a little bit more political influence.
Golly!
So I'm following very closely what happens with the Lisa Cook case, as well as whether or not Chair Powell will leave the Fed board when his chairmanship is up next May. Because if either one of those happens, then President Trump will have a majority on the Fed board. And if he has a majority on the Fed board, he also has the power to influence appointments of Fed presidents, having control of the entire FOMC, and thus ultimately interest rate policy. So I think we are in a time where the future would definitely not look like the past.
Okay, interesting. I want to get back to the sort of so-called Trumpification of the Fed just in a minute, but let's get to some of your thoughts about this also, Ty. What are you looking for as far as September is concerned, given the data we've got coming out this week, and then beyond that, which is obviously going to be the much more murky part of it for markets?
Yeah, I mean, I'm bullish on America. I think our economy's doing very well. The market's doing very well. And the Fed's mandate is to keep inflation low and to keep unemployment low. And inflation's low. It's been low. It's probably going to stay low. It seems like it's going to. Unemployment, however, ticked up just a touch from June to July. And so I think the Fed has to lower interest rates here at the end of the month. We think there's better than an 85% chance of that happening, and we expect a number of rate cuts throughout the next 12 months. So we think that's super positive for the economy. We think it's super positive for the market, and we think it's super positive for the housing market as well. We think they'll get inventory starting to move at that point. So very, very positive. We think they'll do it and continue to do it. Lower rates, I should say, throughout the next 12 months.
I just want to pick up on that point because are you anticipating that mortgage rates will come down off the back of what we potentially see in September? Because, modern history has shown us that that's not always the reaction that we've seen in the bond market. Sorry, those rates as far as the yields are concerned. In fact, last year, I believe the 10-year actually picked up. Given what we're seeing as far as the sort of global fixed income story right now with some of the worries about longer term inflation and more so government spending, I'm just wondering if that is the case this time around, or if there could be some disappointment, particularly on that part of the equation.
Well, for me, looking at what's happening with interest rates in front of what the Fed's going to do, interest rates on mortgages are down. They're down I think a quarter or 3/8 of a point in the last couple of weeks. So the trend tends to be your friend when it comes to interest rates and markets, for that matter. So because of that, we believe that the interest rates on mortgages will follow what the Fed is going to do, we believe, and continue to do throughout the year. So we expect, because of the trend and because of history, most of history, interest rates coming down on mortgages, which we, again, think is fantastic for the housing market, because what that does, it allows young people that are now renting to buy for the first time and people to move up. I mean, it's tough. If you've got a mortgage at 3.2% or 3%, it's tough to buy a house at 6.5%, where rates were just a month ago. So lowering rates will move the markets. It'll allow young people to get into houses. We think it's super positive, and we expect that's what's going to happen.
Yeah, it's been fascinating as far as some of the data that's been coming out. I was having a great chat with Redfin a couple of weeks ago about not just the fact that people aren't going out and buying because of some of the affordability challenges, but they're actually signing on to contracts and then getting cold feet. So they're turning away from, you know, the properties that they've perhaps already negotiated, which is a, you know, a fascinating part of the story as well. Getting back to you, Joseph, I mean, how are you, back to the question of, you know, the Fed's independence and more of the government involvement here? I'm just wondering, you know, how you're looking at sort of the market reaction function to all of that.
So I'm looking at the price of gold. It's surging to all-time highs. I think that tells you everything you need to know. Now, broadly speaking, when it comes to longer-dated rates, I think we have two factors that are happening right now. Now, longer-dated rates are selling off globally today. Now, what they seem to be responding to are political developments both in Europe and in Japan. But let's be real now. The fiscal situation across the developed world is not very good. The U.S.'s fiscal deficit is 6% basically forever. And so that's going to exert upward pressure on interest rates. On the other hand, we do see some slowing in the U.S. economy. The unemployment rate, while still low, job creation is also low and growth is below trend. And that's why the Fed is cutting. Now, I think we really have to take this politicization of the Fed very seriously if you really have a good answer for mortgage rates going forward. Because the president could easily declare an emergency like he did with tariffs and like he's suggesting he might do for housing affordability last week. And under an emergency, all sorts of powers come into being. Now, if he were to have 5 board governors, for example, that opens up things like emergency lending facilities, and that could be used to solve the quote-unquote housing emergency. So really, policy is going to play a big role in shaping the mortgage market and rates going forward. So we really do have to focus on just how this case for Governor Cook and what Chair Powell does in the coming months.
Wonderful chat to both of you. Thank you so much for joining me on the Schwab Network today. It's been a fabulous conversation. Joseph Wang and Tai J. Young, appreciate both of your time. That's going to do it for us on the watch list. Download the free Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. I'm Sam Bartis. Thanks for watching. Market on Close coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marlene Caden. With an hour left in the trading day, let's take a look at where the markets stand right now. We are in a bit of a corrective day to begin September. Down 1% on the S&P 500 right now at 63.90, 175. The Nasdaq, similar story, down 1.5% at 23,144.95. The Dow down just under 1%, 0.9% at 45,136.23, and the Russell approaching being down 1% as well at 23,44.75. As we take a look at some of our futures products on the day here, the complete flip, we're in the green. The dollar stronger today at 98.32. That's up more than 0.6%. Gold up more than 2%, about 2.25 right now at 35.94.10. Crude oil up about 2.5% at 65.56 a barrel, and Bitcoin having an up day as well, up 2.25% at 111,235 on the day, but still considerably lower than we've seen it trade. Now, let's kick things off. We'll look at some stocks that we have on the move. Joining us to cover some of today's top stories and top movers is, of course, NextGen co-host Jenny Horn. A lot of big movers today, so let's start with Constellation Brands. I'm looking at them now, down about 7.5%. You know, what's the news here?
Yeah, unfortunately, not all of the news has been received very positively, because the 7% move for a name that just historically doesn't trade with huge levels of volatility is a pretty big move to the downside after they revised now their fiscal 2026 financial outlook, citing this overall weakened consumer demand. So they updated their fiscal earnings to range between around $10.77 to $11.07 a share. That was well below the $12, roughly, let's call it a range of which they had previously guided for, and significantly reducing their earnings estimates going forward. Their enterprise organic net sales growth also expected to drop between 6% and 4%. Prior estimates had seen a decline of around 2% to even 1% growth. So again, significant revision to the downside, and it really is marked by an unexpected, what they said was decrease of between 4% and 2% in their beer net sales growth. Previously had expected an increase of around flat to up 3%. And they also attribute this to just right now consumer demand and the overall macro situation affecting the consumer. Their CEO said they continue to navigate this very challenging macro environment that has dampened consumer demand and led to more volatile consumer purchasing behavior. They also did say that over the last several months, the high-end beer buy rates have decelerated as both trip frequency as well as spend per user have declined. So looking at the second quarter, they do expect this inventory rebalancing at their distributor level to really reflect these softened trends. But overall, the beer business has seen a huge repricing to the downside, which is interesting. It's not so much, I think, that we're not consuming beer at the same pace that we once were, which actually volume is down on a year-over-year basis, no doubt. But it's that there's other brands that do seemingly rise to relevance, and quickly at that then can almost immediately impact your results.
Well, it's very interesting, too, because when I saw this story that we were going to be talking about, the downward move, I looked to see what was the reason behind it. Interesting, it's high-end beer.
Yeah,
it's not their Kim Crawford wine, it's not their tequila brands, it's Modelo and Corona. Those are their high-end beers. And so very interesting. I don't know if people are favoring things you can get in the gas station or the 7-Eleven, but clearly the consumer is changing their beer preferences, as evidence.
High-end beer is an interesting, that's the term I saw as well, and I was like, what in the world is high-end beer?
And
but
you can tell that neither one of us are beer drinkers as we shrug at what a high-end beer is. Let's move on to Kraft Heinz, also seeing about a 7% move to the downside. This one, 7.5% right now, for a very different reason, splitting into two independent publicly traded companies.
Yes, and interesting is now this industry trend overall has been seen as restructuring, and it really partially reverses then that merger of Kraft and Heinz back in 2015. So they will divide into one company that now focuses on sauces, spreads, and seasonings, which includes their flagship ketchup business, and another that will target selling more of these grocery staples in North America. But the sauces, spreads, and seasoning company, which is provisionally being named the Global Taste Elevation until we get actually a name for confirmed, has around $15 billion in annual sales. I mean, it does wide out beyond just Heinz ketchup. It includes like Philadelphia cream cheese, Kraft mac and cheese, and then the North American grocery staples business valued at around $10.5 billion, and that will include brands like Oscar Mayer, Kraft Singles, Lunchables. I think I'm more in that camp, as I do still frequently, I will admit, consume Lunchables even at this age. But nonetheless, they did say they expect the split to occur in the second half of 2026. They're maintaining their current dividend levels in aggregate across the two companies. And it wasn't completely unexpected. We did get reports from the Wall Street Journal earlier this year that we could see a continual consolidation in this space, and also breakups right now are very much in fashion in the food and beverage industry. We know Keurig Dr. Pepper announced splitting its coffee business aside, as well as in 2023, Kellogg split into two companies, which I still forget, WK Kellogg as well as Kellanova. So following suit with some butter trends, as pricing has still been hugely challenging for these companies.
It is really interesting too, because generally you don't see a merger and then within a decade we're now splitting back up again. But it will be interesting to see, you know, it is following a broader trend in the space to see if this is effective for them to separate the two businesses. But, you know, huge names on both sides. So, and continue to be staples and continue to be things people are spending money on. Because they are not high-end beer.
No, and you know what? If you've got to eat, you've got to eat. Unfortunately, that's the pricing power all these brands have.
All right, so let's move to PepsiCo now. PepsiCo up on the day. They're up 1.5% on this news. There's a new activist stake in the company that's wanting to see a turnaround in PepsiCo.
I know, there's two, I always look at this as two different ways, because yes, Elliott Investment Management taking a $4 billion stake. That's objectively good news, especially as now it becomes one of its top 5 largest active shareholders. But Elliott's also now pretty openly pressuring the company to pursue these strategic changes, as its market value has slid by more than 25% since peaking out back in May of 2023. Now, their snack division, which has historically been a strong growth driver, has also faced mounting challenges. Like, I mean, right now, just overall, including tariffs, price sensitivity, and some distributors saying that the company's focus on its food portfolio has really come at the expense of its beverage unit. And its flagship soda brand does now rank 4th in the United States. It had basically number 2 to Coke for better part of the last 2 decades, but now falling behind Coca-Cola, Dr. Pepper, Sprite, and then of course Pepsi would be the 4th. But to reverse this declining beverage sales trends, they do plan to introduce this new prebiotic cola under their flagship soda brand, which is expected to hit markets actually in the coming months. But it does come after they acquired Poppy, which is that probiotic, healthier type of soda brand, which is actually huge. And so that's definitely helping things here. But anytime you see activist interest and a rally, modest rally on the back of that, you could say, yes, sure, we could see Pepsi right-sizing this ship, but also there's a brand that needs that activist really interest to, I mean, even have this story play out, because there's a reason that they're seeing this need to like completely reshape their pricing, and that's because they haven't been doing well.
Well, it is a double-edged sword scenario here. Like, we like the interest, but the interest is coming because we have a problem.
Right.
For sure. You know, their problem is that they have a 14% drop in shares. I did not realize that they were behind Dr. Pepper and Sprite, that they had fallen to 4th.
I didn't know that they were behind Sprite either. I'm a big brown soda beverage girl, so I was like, wow, Sprite making a run for it here at number 3. But Coca-Cola is the widest by a lot, just to give some clarity to PepsiCo, because the rest are fighting for like very razor-thin margins.
And this is an interesting one, too, because this is not not the only story that PepsiCo is involved in. Celsius was sort of the headline in the story, but PepsiCo also expanded its stake in Celsius and will now distribute the Alani Nu brand. So interesting alongside that increased partnership with the creation, with their use of poppy and their purchase of poppy and the distribution of this prebiotic soda in a more health-focused centric world, and if that will be successful. We've seen Starbucks sort of introducing more like protein-packed coffee, and if this move into the more health-centered consumer is going to be effective or not.
Yes, and I feel very passionately about this because of Celsius and Alani Nu being perceived as these healthier brands. And I mean, you can't argue with that. That's definitely the perception. They've marketed to this like fitness influencer, this younger demographic. But let's be clear, if something is less than about 10 calories, I don't care how many vitamins you pack into that thing, there are artificial flavorings and all of these things, whether it is, you know, seen as a more healthy, more like overall health conscious way to consume energy, I'm still mixed on that.
All right, let's close out with our last one. We've had just a train of IPOs. We're constantly talking about who's coming next. We have a new one, Klarna. Klarna's IPO.
Finally, so Klarna did say earlier today it's aiming for a U.S. listing, valuing the company up to $14 billion, moving it closer to this long-awaited market debut as investors really do seemingly have this strong appetite for these high-growth tech stocks going public. Like we saw neobank Chime, stablecoin issuer Circle have attracted really solid post-IPO demand. Now, I think signaling this overall cautious but enthusiastic appreciation of more IPO activity. Klarna did say it plans to sell about 34 million shares, and the IPO price expected between around $35 and $37 a share, aiming to raise up to $1.3 billion in this public offering. But a lot of times these fintech or these newcomer names we've seen gobbled up by the big banks, but Klarna has remained obviously its own entity. And now after years of discussing it, I can't wait to discuss them actually trading and going public, because every single year this is on like my watch list of stocks to potentially watch going public, and it's been years in the making that we could see this company going public. So we've seen, I mean, years of funding that has been raised between, I mean, around $5.5 to $46.5 billion, but now $14 billion does definitely put it at the lower end of the sky-high valuation it once carried.
Yeah, and it's interesting. We've seen such an incredible investor appetite for these high-growth tech stocks just recently after we've had what was like a years-long dry spell, and now we're seeing these IPOs all pop up. And the buy now, pay later space has been such a fascinating one to watch. We talk about it constantly. So it will be interesting to see if they can get that U.S. listing valuation at the $14 billion they're hoping for. But certainly will be interesting to watch this one, because we've seen, you know, immense success in some of these IPOs and others who had 24 hours of success and then not quite what they had hoped for. But
exactly.
Jenny, thank you for breaking that all down for us. We appreciate it. That's Jenny Horn, the co-host of Next Gen Investing. Now we'll broaden out our conversation, welcome in our next guest, Mark Hackett, who's the Chief Market Strategist over at Nationwide. Mark, thank you for being with us this afternoon. You know, as I just look broadly here at how we're performing today, just so much red across the board. You know, what are your thoughts on the weakness to start out the week and the month?
Yeah, this is a fairly predictable pullback. I mean, we had a very strong rally, obviously, since April, but certainly the back half of August defied a lot of people's expectations. You know, it was a seasonally weak period. You had some of these macro uncertainties. You also had, you know, a fairly predictable and natural period of consolidation, but that really didn't happen. Investors were aggressively buying all dips into today. So as you get into the seasonally weak September period, a period of consolidation is not unhealthy or unexpected. I am interested, however, to see how today closes and how tomorrow opens, because when you look back to the last meaningful pullback, that was that post-payroll report on August 1st. That Friday saw a down 1.6% day, and then you saw a very aggressive 1.5% rally the following day. So Biden dip has worked so successfully this year that until it no longer works, it's probably smart to bet on it.
And it is interesting, you know, you're making observations just about how we've performed recently, but generally this is a time where we're talking about seasonality and trends and historical performance, but we've also seen of late that things have not been performing in line with historical trends that we can usually track. So knowing that, you know, what are some things that you're keeping a close eye on, knowing that we're historically not behaving in a normal way?
Yeah, as you mentioned, this cycle has held very few of the historical trends, mainly because the retail investor really hasn't played ball. Usually the retail investor is the emotional one. The institutional investor is the more disciplined one. Certainly that hasn't been the case through much of this cycle, and the April period was a perfect example of that. So what I'm looking very closely at is the behavior of those retail investors that have been buoyed with confidence over this buy the dip philosophy working so successfully, certainly this year, and that obviously changing the behavior of those institutional investors. So assuming that the retail investor is still aggressively in buy the dip camp, that is obviously something to keep your eye on. The other really notable thing here is estimate revisions are normally at this point of the year fairly negative. This is when companies start tamping down expectations for the following year. But we actually saw all those expectations tamp down following the first quarter. So we came into the second quarter with reasonably low expectations that we beat pretty decisively. And now you're seeing across the economy, estimate revisions turning positive. And if that continues, if the retail investor continues to buy dips and the earnings estimate revisions continuing to turn positive, that's a very good backdrop for the market once you get past the period of seasonality.
Yes, so a few follow-ups there. The first one, I guess, is what do you think the primary driver is behind the retail investor bucking the normal behavior?
Well, frankly, there's almost a self-fulfilling prophecy recently with the degree of buying the dip working. Just over the past 6 months, you obviously saw it on that April 8th rally, but since then you've seen it pretty consistently that anytime the market has even a subtle pullback, like I said, August 1st being the last example of this, the market rallies right off of that. Historically, that hasn't been the case, but the more times it works, the more that retail investors get that confidence, and it becomes somewhat of a self-fulfilling prophecy. You add on top of that the prevalence of social media, which is obviously creating the ability of some of these things happening in a coordinated fashion, and then leverage with things like triple levered ETFs and options activity at record levels for retail investors. Those are the gasoline on the fire of some of these rallies. And again, that causes institutional investors to be careful about being absolutely or relatively short.
All right, so my other follow-up is about earnings. So we came into Q2 sort of in a historically abnormal place where we'd already seen a lot of these downward revisions, and so we posted these pretty impressive beats, as we're almost done now. What are your expectations for our current quarter and through the rest of the year, knowing that we're not tracking quarter to quarter how we typically do?
Yeah, we have a long history of companies trying to play into some degrees of fear to give them a bit of a get out of jail free card with earnings. So we saw absolutely that following the first quarter, where companies set the bar very low. They beat it pretty handily in the second quarter, but margins being as strong as they've been is causing the analysts to raise numbers not only for the remainder of 2025, but also into 2026. Frankly, expectations were almost at a worst case scenario environment following the initial Liberation Day announcements of tariffs, and we just haven't seen things play out nearly that negatively. So we have pretty good revenues beating at a strong pace. We have margins better than expected, and that's all leading to this upward trajectory with estimate revisions. Very hard to get in the way of that, particularly because the bear's primary argument at this point is valuation, and every dollar that we go up in earnings expectation, that valuation argument starts to break down.
And as we talk about some of these things that haven't come into fruition, we played this sort of like get out of jail free card. Everybody postured a bit to make things look like they could potentially be worse. A lot of it to do with tariffs. Now we're dealing with this new information on tariffs, this new ruling. How we haven't seen them fully play out, and a lot of companies waiting and investors waiting to see this tariff impact play out in earnings, at least for this current quarter and the next. But now we have this new news. How do you expect that to impact the earnings going forward? Are we going to see another pivot back to the potential get out of jail free card because we're back in a highly uncertain time?
Well, certainly that's a big part of why we're seeing the drop today, is this new piece of information that really wasn't priced in the later part of last week. But that being said, this is a fairly less emotional reaction than we saw during that initial phase. And I think that there's some fool me once type of behavior in certainly the institutional investors, where they're not hitting the panic button nearly to the degree that they did back in April. So there's this belief that, this is incredibly difficult to accurately price at this point. So obviously there's, the new news creates some trepidation, but the uncertainty isn't nearly to the extent that we saw in that April period. So this is an inconvenience. Obviously the market likes certain
I'm here, Jake Paul, I'm here. Woo, looky. Said, I don't want to come back down. Will this guy shut up? Throws on impact.
How quickly do you think we could
Hey,
start
sexy.
to see, once there is a little bit more clarity on who's paying the levy, how much the levy is going
God.
to be, who's allowed to collect it, etc.?
One of the big surprises so far is that more retailers have not passed on tariff increases. So far, inflation has been pretty muted. Now we've had some tariff delays, we've had some rollbacks, we've had some pull forward in demand. A lot of retailers are trying to hold the line on pricing, and we may see the impacts more when they have to restock. So a lot of car prices haven't changed yet, and appliances and electronics and clothes, but when they
It all happened during the Biden administration.
and a lot of the brands we're talking about are in the fast fashion.
Y'all didn't
space.
complain back then.
That's a shorter replacement cycle than something like a car or a washing machine or a refrigerator. So it could maybe be months, rather than
Washing
years.
machine,
Maybe
refrigerators
on
ain't
the
cheap.
short end, but if I were to benchmark it, maybe within 2 or 3 months, we could see more of these ripple effects actually hitting consumers.
I went and got some aloe vera
Start
for
to
my
see this need to
head.
reorder now that the exemption is gone. Do you anticipate there being potential supply chain issues?
Yes.
I mean, there could be the all-important holiday shopping
You
season
ask all the
that's coming
questions.
up. A lot of brick and mortar retailers within the U.S. have stocked up in advance. I mean, they always buy Christmas merchandise early. This year they bought it especially early. But these direct-to-consumer brands are kind of in a
What do we
different
have here,
situation.
Uncle Zammy?
We're not talking here about
We have a rising wedge,
ships full of goods that are going to
just like that one before that thinned out. I'll show you here in a
That's
second.
not really the de minimis
Shut
part.
up.
This is more.
If I want to listen to you, I'll listen to you. This chick has a thing about tariff this, tariff that. She needs my lips around her neck. Well, it's not really a rising wedge unless we don't call that other one. Upward channel. We just now broke out of the channel, you see what I'm saying? Jimmy appears, and all hell breaks loose. So you see this here trend line right here to that one? You want to put a trend line on that. Come on, you humperdink. See, there's your wedge. And we broke out of the wedge. See the wedge right here? Sometimes you miss something, but this is your wedge right here. And we broke out, and then we came back, and we're trying to respect. Come on, you. Tighten it up right there. So it's already established a support. It either comes up in double tops, and then you have the end of the day sell off. Oh, we're at, it's, see, you only got 12 minutes left. I think we're going to come down. Because we kind of cracked down below this. And there's your head and shoulders right there. So we'll see what happens here in a minute. Coming up to the right shoulder right now. Boom. I did miss it. Who made that call? Randy worked all day. Didn't hang out with the fat cats. $11.70. Geez, them things went up $300. I didn't protect my face good enough when I was in Punta Cana. Now I'm suffering for it. I listened. Oh, never mind. I protected my forehead, my skull with a hat, but not my forehead. Ah. They just went to 13.10. There are 3 minutes left. We broke resistance. See, I did this double top. I just now noticed this. So that's a triple top breakout. Okay. Actually, I'm impressed now. I've just now know that I called this knife earlier, and then I called this one here. This one I really liked. I did my homework on it. And there's the yin yang right there. And there's the bell. So yeah, that ended up being like today's high earlier. If I'd have pulled that map out earlier, I mean, I would have definitely called that one out. Maybe triple top. Is it going to break? I did call a squeeze. Said it was going to squeeze any minute, and it did. So, not a bad day for charting. Oh, I missed 2 plays. Okay, well, are we glad Jimmy's back? Give a hell yeah.
Affirmative. Affirmative.
Affirmative? We'll get at this again tomorrow. I think I went through jet lag. I've only had 3 hours sleep. I don't feel too bad though. And I don't really feel that jet lag. I kind of got pissed off when I come to Springfield last night. I had to pay the parking fee, and then Springfield drivers will drive you nuts. I'm driving down the road, and this guy's kind of driving slow, and all of a sudden the guy in the back truck's tailgating this guy and pulls the side of him and honks his horn real loud, and I'm going, I'm back in Springfield again. You drive like that in Punta Cana, they'll shoot your ass. I mean, it's like if you ever been to a third world country. I mean, they drive tailgate and in and out and weaving and don't use turn signals, and they drive just fine. Nobody getting mad at each other, real patient, but I mean, we weren't probably a foot and a half behind this one guy. I'm going, Jesus. I'm holding on to my seat belt. I really liked this trip because when I got to the airport, it was at Punta Cana, it was a mess. And nobody speaks English. So I go to the security guard, and he points me in this direction, and I go to him, and I follow, and then I just grab a guy that looks like he knows what he's doing. And so I give him $5. I said, can you fix me up, get me to Punta Cana Princess? Because I already paid for the shuttle. There's a shuttle. It means more than one person for $18. And so I wait around. People are getting in front of me and all this, just total chaos. And I just stood my grounds right where I was, where he put me. And I didn't move. I wanted to get up in line, but I'm watching people going in front of me in the masses, and I'm going, he told me to stand here. So I waited about 10 minutes, and he finally waves me down and puts me in this van, and I'm the only one in this van. And I got a 25-minute ride straight to my resort, which I really appreciated. So I give the guy that got the guy $5, and I give the driver 10. And then I had to make arrangements to come back on the last day before the last day, and they called him up, and so he was right on time. He's about 5 minutes early. Same not the same dude, but the same response. I got, it was a shuttle, but I ended up being the only person in the shuttle, and he straight ride back to the airport. I just thought that was so cool. I gave him a 10. I first gave him a 5, and then I gave him a 10. I said, this is worth 10. I mean, heck, I don't have to stop nowhere. And the traffic, I mean, geez. It's like Jamaica, but worse. These guys, I mean, it was busy down there, and the town looks like it's like a tornado went through it. It's all brick. So, I mean, they got construction jobs everywhere, concrete trucks, and just spilling sand everywhere in the road, and people driving little motorcycles on the side of the road, and little bitty vans, people loaded up their trucks, driving in back of their trucks. It was just fun to watch. I mean, once I got to the resort, they hooked me right in, and I told them I wanted a downstairs room because my knees were hurting a little bit, and so they put me in a double bed. Instead of a king size, I took the double. And it was on the first floor, so I didn't complain. I think if I'd have had the upstairs, I would have loved the view much better. But, they had me fixed up on third floor in a real nice room, and I decided to go with the first floor. And then I requested water. I said, I don't want to, I'm not going to do much drinking. Just give me a bunch of water in my fridge. And so they put 7 bottles of water in my fridge. It'll last me all day. And they did that both days. And the food was really good. Probably not the best, but I mean, it was good. I was really impressed. A lot better than the last resorts I've been to. And the girls, God, they were everywhere. But you couldn't speak their language, and it was kind of hard to sweet talk them. They wouldn't know that I was saying something inappropriate or anything. Baby, you feel that's sweet. That's swimsuit. I mean, not one of them covered their butts. I got to see butt all day long. And I played games, and it was like a frat house when they were doing the drinking games, which kind of surprised me. And I'd get up every morning, and I'd walk up to the beach and had a cappuccino machine. It had different kind of lattes and stuff, and I always grabbed a couple of them and sat and took pictures of the sunrise. And then I go late at night and grab one in between. Drink a lot of Loca Mocos or something like that. Loca Moco. Mocha Loco. Had banana drinks, and I didn't drink much liquor. I drank 2 drinks, and I locked my key in the room, so I said I don't need to be drinking any. I want to feel good. And then I could smell some marijuana around, but not much. But this weather was just perfect. Good breeze going on, and they had these little sparrow birds flying everywhere, and kind of adding a little bit to the ambiance. And the bartenders were nice. I went up there to get a lot of ice so I could drink it with my water. And I'm going to do a little slide video when I get around to it. pictures, just pictures of shots. I gotta figure out how to download a couple small little videos on my computer so I can add it to the video. A lot of seaweed. I didn't go to the beach much. I just went there every morning and that was about it. We had entertainment, was some kind of DJ guy that did a lot of little aerobic exercises, volleyball and dancing, karaoke, and then one night had 5 guys up there dressed as women. I thought that was pretty fun. I showed up later. I'd probably been one of them. And I stayed on the resort. I didn't go out at all. I didn't feel like I needed to. I wanted to get my best, as much time as I could there. And I ate well. I just didn't get to go to the steakhouse. I kind of wanted to do that, but I had a crab cake plate. Not a crab, but a lobster plate. It ran me $60. And that was excellent. And I had mahi and some other fish, grouper and ribs, and then the last day they had bacon. They didn't have bacon any morning until the last day, so I loaded up on that. And the grounds were just beautiful. I think that's about it. I'd go back to that resort, but I want to go to one that's got a little bit more, I don't know, that was a good resort. I went in there with low expectations, because a lot of people that go to these resorts, you know, they're always at these real fancy 5-star, and then they go to something like, it's a small boutique one, and you got to remember you're in a third world country, and the resort that I was in was beautiful for a third world country. It's old and it's still up to date. The fixtures were kind of rusty a little bit. A little musky smell in the room. But after the air conditioner run for a day or two, it got better. It was cool enough for me. I slept like an angel. Nice hard bed. I didn't get up very much in the middle of the night at all. I just slept. I had a Whirlpool bathroom tub in my room, so I loaded it up with some stuff I bought. But the service was probably 5+ star. I mean, it was real good service. I have no complaints. Everybody said hola. I had a cat that I befriended and a bird that I pestered a little bit. He always came back to the same spot trying to get some cookies, and jumped on this woman's table when she was up there at the food bar, so I shoo-flied him away. And they're there with the wine at the dinner to pass around the wine, and I didn't drink but one glass, half a glass. I just didn't drink much. I didn't want to drink much. I wanted to enjoy it. And I used to, probably when I was younger, I would do it, but so I didn't drink much. I had 2 drinks. That was Friday night. That was it. And then I had that marijuana drink. That really gave me a buzz. He just gave me a little shot. I'm going, what? It's not a liquor buzz here. It's something else. I said, what is that? He said, marijuana. I said, oh. And the people around kind of looked at me like, what? What did you just say? So that's it. I needed that vacation. It's been 2018. The only thing I didn't like was the flight. Getting there and coming back. I mean, I can't hold my pee for more than 3 hours. So I had, and I don't like going on the airplane. I can't pee. I just can't whip it out and in a public place, and I just got a phobia or something. I don't know. I just can't do it very well. Now, if there's nobody around or I'm in the stall, I can do it. But I went to the bathroom once on the plane. I couldn't go, and I had to go. And God, I'm sitting here and I can't let it out. I feel like I gotta go. And then the second time on the way back, I had to. I couldn't hold it. And this freaking two chicks I sat next to, and this one I said, I gotta go use the restroom. Will you let me out? And she just kind of, I don't think she knew what I meant, and she stood there and did nothing. And the other girl sitting next to me said, I said, ma'am, I gotta pee bad. Will you please let me out? In a polite way. And I said, oh, thank you. Thank you, thank you, thank you. And then on the way back to Springfield, one of the bathrooms was not working. And that's it. I didn't put enough lotion on my face, so I'm peeling. My face is. I've got some aloe vera on it now. And I read up in here while we were trading how to take care of it. I didn't protect it well enough. Well, it'll take about a week. I feel like my nose is going to peel too. It's kind of dry up there. And I put aloe vera lotion with called a lidocaine, Lidocaine. Helps restore moisture to sunburned skin. So you'll see me putting that on my face all day long. And then take nice cool showers. And drink a lot of water. Google's ripping. Judge issues sealed decision on Google online search monopoly case. Woo! Google. No, it's already in the room. Hey, Sue. Okay, well, let's do one more thing here. Let me think here. There's a little pool at night. When the sun rises in the morning. There's a restroom in the bar. You sit up there, look over the ocean. There's little tiki huts. There's me blowing a kiss. And that's fondue, shrimp. And you mix them in these sauces. That's the buffet. I really liked that buffet. It was small, but it was good. So, I had a guy trimming these palm trees all throughout the resort, and the shadows, when the sun would come out, it would go into the pool, and you could stand under them, be in the shade. So, I'm gonna head on out. Yabba dabba doo.